from the Crypt.
What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty Bent here on a hot Wednesday afternoon and evening now in Brooklyn. Very excited for today's interview. I got a random DM about 5 days ago with our guest telling me that he's going to be in New York. Wanted to hop in the studio. So somebody I recently discovered on Twitter about 6 to 8 months ago. Been fascinated by what you're saying on Twitter and your thoughts on the space in general. I'd like to introduce you freaks to Patrick Dugan, CEO and founder of TradeLayer. Patrick, welcome to the pod.
Thank you very much.
Well, thanks for coming on, dude.
It's a great pleasure.
Thanks for hitting me up.
Absolutely.
It was a great random DM.
Yeah, well, you know, you're like the Joe Rogan of crypto podcasts. So, you know, I had to, you know, you go to New York, you go meet with the big money guys, and then you go on Marty Bent's podcast.
Well, I'm flattered, right? I'm blushing. You freaks can't see it behind the mic, but I'm blushing. I don't know much about you other than Twitter. I don't know about your path to Bitcoin. I've been following TradeLayer at an arm's length more recently. For you freaks out there who don't know what TradeLayer is, basically a decentralized, you describe as a decentralized savings vehicle. We'll get into...
yeah, if you could take that posture, or you could take the other side of the swap and be leveraged and punt around.
Yeah.
Not if you're a U.S. person, we'll get into that. But, yeah. But yeah, decentralized derivatives exchange protocol on top of Bitcoin.
So what is your tale? How'd you find Bitcoin? How'd you end up making this decentralized protocol, this decentralized exchange?
Well, how I found Bitcoin... I maybe have told this story a few times before. It's kind of a classic. So I bought the dip after the first the bubble in 2013 because I was trading for a while, and I'm like, okay, here's the trend, right? Buy the dip. Treating it kind of just like a financial asset. And then I was in Argentina trying to deliver cash to my baby mama who got out of there, but I'm out in the hood and hanging out with these dudes because, you know, I figured like take a little hit of their roach.
Their wacky tobacco.
And, yeah, chat them up. You know, I would do this sometimes in Argentina and, you know, make friends with these guys. And, you know, we don't have a lot in common, right? But, you know, I like to be like a man of the people or whatever. But this time around, one of these guys got a bright idea, right? And he texted his friend. And then, you know, he's like, hey, come with me. It's dangerous here. You know, I'll walk you to the bus stop. So I'm thinking, like, I'm probably going to get robbed, right? So I'm chatting with this guy, and he's like, I'm like, so what do you do? You know, I've told you a lot about myself. How about you? And he's like, well, I do a few odd jobs, and I rob people. And I'm like, thinking, yeah, I'm definitely getting robbed. And then he's like, hold up. And his friend is rolling up, and his friend pulls out this piece, and it was like pretty new. It was like a hand. It wasn't quite a hand cannon, but you know, it was like a pretty big chrome gun. And I thought, all right, if that's fake, I'm gonna beat the shit out of these guys, right? And he pulls the thing back, puts it up against my ribs. I'm like, yeah, all right, that's not fake. So, you know, I do what they said, like, give me my backpack. So I had, like, HSBC bank account, which, of course, HSBC closed my bank account when I was trading Bitcoin later, right? But, yeah, I lost the security device for that, passport, laptop, tablet, the wallet, you know, all my cash, like I had $1,000 in the wallet. Because that was the most efficient way to pay people back then. If I used Zoom...
When is this?
This was in 2013.
Okay.
So if I'd used Zoom, the fee would have been about as much on all that volume, including, you know, what you can get for the street value of a dollar because there were capital controls, right? So you had to, if you brought a dollar physically, and they generally like the really crisp $100 bills or 50s. So if it's like a crumply 20, they don't want to deal with it. You know, you get more pesos for that, right? So I figure, all right, I'll just go and hang out with people. But yeah, I lost all that cash. And so I only had the 5 Bitcoin on Mt. Gox, funnily enough. It was my safe haven at the time. And
what a terrible safe haven.
Well, yeah, this was about 6 months before they went belly up, right? And so I went on local Bitcoins at the behest of my friend Adam Stradling, who's kind of an OG. He started Trade Hill with Jared Kenna back in 2011 in Viña del Mar, Chile, which is around the area where I live nowadays. Anyway, and I found this guy, a local, is a hardware store owner. Sold the Bitcoin to him. He gave me a wad of cash. And I was like, holy shit, this is real, man. We just jumped over capital controls just like that, you know? So I kind of saw the Matrix in that moment.
So you got robbed and found the use case of Bitcoin.
Yeah, pretty much.
I've only been robbed once in my life, and it was for a bag of chips when I was like 8 years old. But what was the...
South America's pretty wild, man.
Yeah, I almost got robbed. Like I said, I was telling your wife before we started recording, I like to go down to Costa Rica and Surf and Hako, and Hako's not the best town. So if you get somebody asking you to come down an alley, do not go.
Yeah, that's a good rule of thumb. Yeah, don't trust people. Well, yeah, you grow up like really naive and gringo, right? And everybody's like, hey,
Pura Vida. It's like, Pura Vida until the lights go down. And then,
yeah, well, because when there's money on the line, then shit gets real.
Yeah,
pretty much. So I got involved. I started trading it. There were people. I was in Startup Chile back in Chile, so I knew some people who were trying to get money out of the country. So I'd sell them Bitcoin, and then I had to call these guys up at Banco Bice, which is a smaller bank, and put in an order in their Java applet, and then call them up so they would tag the ticket, and that's how they trade currency over there. That was the best Chilean peso dollar spread I could get. Then I wired out. HSBC, of course, is like, what's going on, guy? And I'm like, oh yeah, it's capitalization, whatever. They shut my account down. But yeah, I managed to make some points in a safe way doing that. So I was always coming at Bitcoin thinking of it as a flow business and being reticent to load up on a lot and take a lot of risk.
What do you mean by flow business? For the freaks out there.
I'm not trying to just hold a bunch of Bitcoin and be exposed to the market. I'm trying to extract a dollar denominated yield by trading it in this arbitrage sort of fashion. So it's maybe I'm kind of a nerd, because I would make a lot more money if I had more of that risk tolerance. But so I got into that. I wearing this La BitConf T-shirt. So that was my first crypto conference back in 2013, and that's where I kind of met the world. Back then it was all the OGs, right? So Tone Vase was there. Tony Galippi was running BitPay. Met Jay Kwan at that thing. He was trying to figure out what he was going to do. He just finished doing Yelp's mobile app and got some shares, and he was like, what's the next thing? So we were talking about doing a decentralized exchange and how would you do that. Just a bunch of people, man. It was a wild time. Johnny Dilly, he was 24 working. He was an analyst for Pantera back then.
What a character.
Yeah, he's a good guy. So yeah, that was my. Oh, and you remember that Gulch guy?
Yes,
Gary Johnson.
Yes.
So I brought a bunch of cash so I could arbitrage it, and I ended up handing it over to that guy so I could buy his Bitcoin at 5% under. And he was like, "Oh man, 5%." I'm like, "Hey, take it or leave it, guy." So I'm I'm the only guy who ever gave Gary Johnson money and made a profit out of it. So that was my first. I mean, so that was a great conference, right? Just and of course Diego of Rootstock. Back then they were just trying to get a little hedge fund together, and they were getting this community together. So I was coming off of that. I was like, okay, if I don't get rich off of this stuff, I'm a fucking idiot, right? Something's got to give. This is gonna be big. And then my thought was I'm gonna do a hedge fund where there'll be a token and it'll be redeemable, and we can arbitrage it in the secondary, kind of like our own little ETF. And then I looked into it, and I'm like, well, that's super illegal. So I didn't quite go that far. But before I got to that realization, I was attracted to the Mastercoin project as a way of issuing it. So I reached out to Brock Pierce on LinkedIn, and I said, hey, could you intro me to them? And he said, yeah, absolutely. So Brock Pierce did me a solid.
Was that Willett, right? His last name, Willett?
Yeah, who shot JR?
Yeah.
J.R. Willett, yeah.
Yeah, J.R. Willett.
Yeah, that's what we call the Satoshi increment of a property in Omni is a Willett.
Oh, really?
Yeah.
Interesting.
Yeah, it's he wrote the second Bitcoin white paper. So
that's what people don't understand.
Yeah, it's the second one. So it's the sequel. So maybe the TradeLayer white paper is the third Bitcoin white paper.
Oh yeah,
but not really. It's the 1,200th and
8 million. I'm not gonna lie, it's the first white paper I've read in a while. I was very white paper jaded there.
Yes,
for many years.
Well, you know what I did is I took the Bitcoin white paper and I as a template, so I could keep it nice and tidy and focused on the technical stuff.
So let's talk about TradeLayer.
Yeah.
What problems is it solving? What how does it benefit Bitcoin? And what stage is it currently at right now?
Okay, so well, first off, wouldn't it be nice if we could decentralize BitMax to some extent, right? So you wouldn't have to worry about what happens to Arthur Hayes when he flies around the world. You got the custodial risk and all that jazz. So that's interesting. If you're a degenerate gambler, you can have sovereignty in your speculations. But what about the other side of that, right? So my dream since like 2014 when I got involved with that project and I started poking around at how would we do leverage, and I had this realization. This was before you had like inverse contracts and the perpetual swap on BitMax about 2 years earlier, that if you did an even hedge, so you buy a Bitcoin at, let's say $1,000 and you sell $1,000 worth of contracts, that you could create this synthetic dollar, right? And I was like, holy shit, I just invented like the new financial system. Like this is decentralized banking, is what I was calling it. So I don't call it that anymore because I don't want to get like, it's a kind of a lightning rod term, especially after that Texan guy. Remember that?
Who?
I don't remember. This is one, it was one of these shitty fundraiser things. And he was like, excuse me, but we're decentralized and what your rules, it's a different meaning. So the state of Texas, like, gave him a slap or something.
Yeah.
So, okay, so it's not banking, it's just sort of getting at, like, what is banking, right? You're issuing debts, right? So these are contracts. You got the government, and the sheriff will, like, show up with this gun and take your furniture or whatever if you default, right? You go through bankruptcy, you got to liquidate some. I mean, they give you limits depending on the state, so you can keep your furniture. But, it's ultimately backed by this social contract between, capital and violence, right? Which is, like, that's what leftists, like, have kind of a point, is that capitalism depends on this handshake, so I was, like, an anarcho-capitalist. And then I got like a nice taste of that, out there in anarcho-capital land, living under capital. It was like sci-fi, man. I had a cash dealer. I had like living in Argentina. I lived entirely in cash and in Bitcoin for about a year in 2014. And it's like better to just get the ACH deposit and have auto bill, like take care of it. Right?
It's a lot simpler.
Yeah, like I would spend like 2 days a month just running around town taking care of business like that,
What?
So
was that normal activity for like Argentinians during that period as well, or were you
a lot of people unique? No, because not a lot of people were like trading Bitcoin and shitcoins for a living, and earning consulting income in Bitcoin from a ICO foundation. I was like I'm kind of a weird guy. I've always been a little bit on the edge there, But people would do shadow banking before Bitcoin back in that environment. So you go to Guido. And Guido's like, all right, wire the money to this accountant in China. So you wire him a couple grand, and then a few days later, this guy shows up to your house with an ankle band and counts out the cash, and you got your cash. That's how I did it in early 2013, right? So you're familiar with shadow banking? Like it's a big thing in China?
Yeah.
Right. So like what Bitcoin does, well, and then the legitimate peeps in Argentina at the time, like Globon is a pretty big IT outsourcing company. They've made a few video games. They would do this thing called the dollar Greece, or the gray dollar, which is in between black and white, where they buy the Argentine bonds here in New York for dollars and sell them in the local market, and they get settled in pesos.
Just arb that.
Yeah, so I mean that, right? But it would end up being somewhere in between what the street value was and what the fixed, scam value was, right? And if you think that's bad, because it was like a 50% differential. The soy farmers had a 30% excise tax on their exports, so they would get
good. They deserve it. This soy,
yeah, right.
Exporting soy to the world. I'm kidding.
So they get like 6 pesos, and you'd get like 12 pesos on the street. So that was the scam, right? So Bitcoin is kind of like that bond. It's something that you can trade and make this transfer that effectively. So my vision was like we could have dollars on the blockchain that are decentralized, and I was also considering having dollars that were like offshore bank account deposits that you just tokenize, right?
Is this after seeing Tether, what they've done?
Yeah, so I was talking to Craig Sellers about it, and I said, yeah, you could have these two species, and like the contract-based one's probably going to pay, and the other one probably won't, but they kind of have a utility because the other one's redeemable. And he's like, it's interesting you mentioned that. I've been working on this thing called Tether. So I'm like, oh, yeah, okay. So keep it. So I actually used Tether in January 2015 with my guy Dante, who's the cash dealer, to save $20 on Bitfinex from having to buy it and sell it, right? So that was like a use case for Tether that actually saved me money when I was like pretty broke last crypto winter. But yeah, obviously there have been some problems with Tether, and what happened with Omni was it had sort of a regulatory capture, not a regulatory capture, that's my notification of this very recording. So I'm just powering this off so it doesn't bother me. What am I trying to say? So basically, like, what if everybody could just have like the denomination they wanted, dollars, whatever, and not have to worry about the banking system, not have to worry about getting their money frozen, right? That's what Bitcoin's all about, right? So wouldn't it be nice if you didn't have to take the price risk to have that optionality of sovereignty? Mm-hmm. So I was calling it decentralized banking. Now I call it decentralized currency. I think, it's interesting from the point of view of like a wealthy baby boomer investor to be able to get yield in dollars. So I ran a fund to that effect for a little while. But it's very complicated, and like tax accounting is hell. I'm having a meet tomorrow about helping this tax software get this hedging use case accounted for, because I need to do it. So so it's not for like the everyday person, right? So what I want to have is just a dollar unit that people manufacture, kind of like how MakerDAO manufactures it, right? But MakerDAO uses this lending model, and it's rather capital inefficient, and there's this somewhat centralized board of governance from the Maker token holders, and they have this negative rate, the stability fee, to try and hold it together. And I think that's the wrong approach.
Yeah, it seems pretty terrible. It seems very arbitrary. They're just throwing interest rates at the wall to see what will stick.
Yeah, we're in a very experimental time, but I think that's not the right direction. Yeah.
Yeah. So let's get into this. This MakerDAO, these synthetic dollars are very taboo in the Bitcoiner world. Why do we need synthetic dollars via Bitcoin and a blockchain ecosystem or a decentralized exchange? How long will this be needed if we ever say we transition to like a Bitcoinized world where maybe Bitcoin takes over as the reserve currency? Is this sort of just like a bridge time period between the traditional fiat world and a Bitcoinized world?
Well, you've read Hayek, right? The pyramid, you got the power money, and then you get the subsequent things that are a little looser.
Well, let's walk through it for the freaks.
All right. So, like, his vision back then was like gold, right? Mm-hmm. So you start with gold at the base of the pyramid. Then you get government currency. And there was a time where they had Bretton Woods, and monetary policy was somewhat tied to gold. First, there was a hard gold standard. Then Bretton Woods was like a soft gold standard. And now we've had the petrodollar standard, right? So it's basically if you can get the Vision Fund to buy out your startup, kind of a deal. So then you go up the chain a little more, from the government notes, you get the like corporate notes and the stocks, and then you go out further and you get like all the interest rate swaps and all that stuff, which becomes like $1 quadrillion in open interest from, total gold value is $5 trillion to the extent that gold is serving as a check on all, which
probably isn't anymore.
Yeah, they did a pretty good job of bastardizing it with the market infrastructure. Although China's been doing a pretty good job of taking that over, right? So they bought out the London Metals Exchange. They're trying to make Shanghai.
Well, this is what I wrote about yesterday in the Bent. Is over the last 2 decades, China's 4.5x'd their gold holdings and denominated in tons, and then Russia's 5x their holdings in the last 10 years. So it seems like...
Well, and those numbers are at the central bank level. But what China's done a really good job of is culturally encourage people privately.
Like India? Similar to India? Like India has a gold culture? Or?
Well, that's a little deeper because you've got Diwali, and it's a custom that goes back a long time. And you've got the wedding aspect where you've got to have gold at the wedding. So that's always, so Indian wedding season's always been a part of the seasonality and the gold. I used to be a gold bug, and I traded it on a Wanda and stuff when I was starting out. So yeah, and I read a lot of Zero Hedge, So,
as did I.
Yeah, right. And then what happened, right? We all were like, yeah, all right, we're gonna be the bond vigilantes against Ben Bernanke, and then we had 2011, and everything topped out, and they actually succeeded at engineering this Goldilocks situation for the better part of the decade, which was cool for me because I worked for like VC funded companies, and that's all just this low time preference shuffling that worked for me. So I can't complain too much. It's better than like the economy crashed in 2008 and we all came of age to a Mad Max desert environment.
Right.
But yeah, I mean, are they going to be able to do it forever? I don't think so.
Right? Yeah, it's the question is how long can they do it?
Yeah, and so The one scenario is they succeed at creating inflation, but then it's like it's more than they imagined. Right?
Well, I would argue it already is more than they imagined. This is another thing we've been talking about, like the shadow stats inflation versus the official CPI.
Well, that's true, and even the official one ticked 2.8 last year.
Yeah,
which is maybe a head fake of Trumponomics. So we'll see.
It's 50% above almost 50% above their target of 2. So that's
right.
Yeah.
Well, and what's really important are real interest rates. So they fixed the Fed funds rate at like 2%, 2.5, right? So it's like you got this little bit of a real yield there. And you got negative nominal rates in Europe and Japan, and their inflation is quite low, but it's more of a negative real yield. Whereas America, you get a slightly positive one. So that everybody comes to America, buy the American stocks, right? So it's kind of worked out. And yeah, the other scenario is if the inflation doesn't show up, and then we see the IMF is really kicking this around lately. But they've been kicking it around for years, right?
Mm-hmm.
Just keep beating the drum about going to nominal negative rates, and then I'm pretty sure you're going to see negative real yields that way too, right? So it's kind of like New York right now is very lovely. Springtime, it's a great place. It almost feels like
vibes are high.
Yeah, it's like a Mediterranean climate, but not really, but it feels like it. So that's the Goldilocks economy since the 90s, and then New York in the winter kind of sucks, and New York in the summer kind of sucks, right? So that's kind of the state of the global economy. It's like they're short a straddle, and they don't want the thing to go up or down too much. They've got to thread the needle in this narrow band, and then if the inflation runs away or they go too negative, it's gonna get pretty weird, right?
I feel like it already. I mean, 2008 was definitely weird, but
yeah, that was weird.
They've set themselves up for a weirder situation going forward, and. One thing, a podcast I listened to last week with this dude Jeff Snyder talking about like the euro dollar like shadow banking system.
Man, it's so great that you brought up Jeff Snyder. That guy, he's one of the best analysts in the world.
Well, let's talk about what he's talking about the euro dollar situation.
Yeah, so he puts the dollar in parentheses a lot to highlight its sort of postmodern nature, right? The dollar is largely an accounting entity, right? So if I have a dollar account in Chile or wherever, and they've got N million dollars in their branches in cash, and that's the great thing that the dollar's got going for it. The M0 physically is like being hodled by a lot of peeps, right? Like in Argentina, they've got about $200 billion in cash literally under the mattress, or maybe it's in the walls, whatever. I don't know the details of those particular apartments.
This is USD.
Yeah.
And just to add, I don't want to interrupt, but to add to the fact of that, there's more $100 US dollar bills in existence than $1 US dollar bills in existence right now.
Well, that's that store of value case, right? SOV.
I think it's exactly what you're talking about.
Yeah, well, or if you go out to like a border village between Cambodia and Vietnam, they're mostly trading dollars. They're not trading, even though euros theoretically are liquid. This is like the maximalist argument that like there will be only one, like Highlander. It's not literally true, but when it comes down to the edge, then yeah, you do pick one thing. Usually, right? And like with finance, the collateral of choice, the Bitcoin of the 80s was the U.S. Treasury bond. So like Salomon Brothers were flipping the bonds, and you had like the savings and loan crisis. You had Michael milking them with the junk bonds, right?
Mm-hmm. And you had Louis Ranieri come in and collateralize all that stuff.
Right, but that was really innovative back then,
yeah.
Right? And it was in a way, it was almost a good thing because now you're getting a lot more capitalization out. And the 80s were a really weird time. I showed a bunch of bankers in 2015 at a conference in Miami this chart of M2 climbing through the 80s and the inflation just trailing along. And they all lived through that. If those who lived through that, I mean, these are somewhat older people, so I imagine a lot of them lived through that decade. All the Latin American countries were doing the same thing, but their inflation was through the roof, right? It was a mess. So like Salomon Brothers figured out, you can use treasury bonds as collateral. And, the treasury bond represents, in a way, the spine of this whole Kissinger petrodollar engineering that was working so well. And you start trading interest rate swaps with that, right? So now they're making money off of money in this fashion. And so the interest rate swaps are nice because people can be in debt. And it's like Margaret Thatcher said, the problem with socialism is you run out of other people's money. Well, not true, because you can go to Wall Street and they will help you.
They'll help you create money out of thin air.
Yeah, you just have to hedge your interest rate. So, but then the joke's on you because they have this trend downward in yields. So, all right. So, like, ultimately, a dollar became this fuzzy unit of account. And if you have a debt in some currency and you're trying to do, like, international transfers, shuffling it around through the correspondence system, and you go trade an FX swap with Citi, you can turn what is a foreign asset into this synthetic dollar denomination. So my dollar bank account with BSA, back when I was doing that, I saw they had dollars in the branch. I was able to take some out. But they surely have more digital representations than they have the actual cash, right? Mm-hmm. And they use these FX swaps in the way that you would buy a Bitcoin and hedge it into synthetic dollars. They do that with their foreign currency. They have the power to print money in those currencies, not in dollars. They don't have the FDIC. They don't have the Fed bailing them out. But don't worry about it. It's a pretty liquid global market. And that's like the wholesale finance system. So Jeff Schneider is he digs into that. And, he's smarter than me. He gets all the numbers and slices and dices them.
Well, that's like what I was particularly interested in, his analysis. This is the Macro Voices podcast episode from last week. I'll link to it, or 2 weeks ago when this is posted. I'll link to it in the show notes. But I don't know if it's proper to link to other podcasts in your podcast, but whatever. Basically describing that there was a liquidity crunch in the euro-dollar system market, and that's probably what was the major cause behind 07, 08, instead of mortgage-backed securities. Yes, the MBSs and the CDSs were very important in pushing things like over the edge, but he would argue that like a liquidity crunch in the euro-dollar market is really what caused.
Well, I think one begat the other, right?
Yeah.
So the stuff at the risky end started a contagion, mm-hmm. And then it's like, what happens if Deutsche Bank goes bankrupt? Like, we did these wire transfers.
We're not too far from that, are we?
Well, I don't know. I'm not going to speculate.
How much derivative exposure do they have? $242 trillion.
Well,
of notional derivatives or something like that? Yeah,
but it's more complex than that because a lot of that might be netted out. And now with Dodd-Frank.
How do you unwind that, though? How do you unwind a $242 trillion notional book?
Well, you get the most capitalized banks to acquire the less capitalized banks, which is what happened, right? Mm-hmm. And we've had this is something that Schneider talks about a lot. We've had this nice little downtrend that's been kind of slow and steady in the overall open interest in those markets. And then Dodd-Frank has forced people to actually have like tighter margining requirements. So it's not just like, I'll write you a swap, I'll write you a swap. Like, the Salomon brothers had that. They did credit lines back. This was in the 80s. They get credit lines, and they'd be trading Forex with – there was no notion of how much leverage or it's just like we don't have any equity capital for this. We're just trying not to lose the money on the trade. So, it was like that in 2008. And in a way, things like CDOs were a way of getting around the capital requirements because it's like, oh, no, it's off balance sheet, right? So they're kind of taking advantage of the bilateral exemption in the Commodities Exchange Act. Because when they made that, they didn't want to be hassling, some farmer doing a contract with Archer Daniels Midland or whatever, right? That's beyond their scope of regulation. So the investment banks, or like there was a famous example. I read this book when I was in my formative years called Traders, Guns, and Money by Sajid Das. Mm-hmm. It's quite good, and he tells a story of a Japanese trader who lost like $400 million, and then he used a derivative to make it go off the books, and he was able to maintain face for several years before the chickens came home to roost. So Dodd-Frank is like, okay, forget about it. Like you gotta bring this in. They do have an $8 billion a year turnover de minimis before you're a regulated swap dealer, and you got to be in the NFA and you got to be on a SEF, right? So you can do so like medium scale capital, for instance, with TradeLayer could do $N million a day in turnover. And be well shy of that threshold. So it's, there's I've been doing a lot of work on Dodd-Frank trying to figure out how to make that play, right? And there's some room. And they're also pretty progressive at the CFTC. So it's an evolving situation.
And so this is one thing. I've studied the history of the 07, 08 crisis pretty intently because I was senior in high school when it started and was in college while it was going on and studying economics, and I'm interested to hear your thoughts on this. Like, so a lot of people would blame Graham-Leach-Bliley Act, the act signed in 2001 here in the States that basically made the Glass-Steagall Act obsolete, and the Glass-Steagall Act put barriers between commercial banks, retail banks, and insurance companies. And a lot of people would say this sort of breaking down of those barriers led to 08, 09, and the contagion risk that...
Well, that was only a 10-year window. Then you got the Volcker Rule, right?
Yeah.
And they put a stop to that.
Yeah,
I'd say there's something to that, right? And it's you could lay it on the Clintons a little bit that they did some of that deregulation in the 90s that led to like Enron and such. But I think derivatives got a bad rap though. I think derivatives are actually very useful tools, and they don't just have to be tools for wholesale international banker finance to create what Jeff Snyder called "quote unquote" dollars, right? Anybody, a mom in Botswana can create dollars in this fashion. And it's incredibly useful. It's incredibly liberating, especially if the saving rate is pretty good. And I'm not making representations that it might be anything at all. Depends entirely on where the market's floating. I've been working on interest rate floors. We could talk about that in a minute, so that people can kind of set it and forget it, and then you're going to get a lower blended rate than you would on like BitMax with that. Because obviously with BitMax, you can do this synthetic dollar position, and if the market's down and there are negative rates, you come back a month later and you're down 15%. It's not very good. What
the hell's going on? Well, all right, before we jump into this, again, let's quell the... I can feel the heat from some hardcore Bitcoiners saying derivatives markets, derivatives on top of Bitcoin. What are we thinking? Like, why aren't we trying to get away from this?
Are we repeating the mistakes of the past? Right.
We're trying to get to a sound money. Like, is this type of financialization worthwhile? Is it advantageous for us? Are we trying to get away from this, or do you think there's an argument to be made that we can build an even better derivatives market with Bitcoin? The driving fact of that thesis being that there's no backup. Like if you fuck up with Bitcoin as the end all be all collateral at the end of the contract, like you fuck up and the market just washes over you.
Sure, right?
Yeah.
Yeah, I mean, so there's systemic risk, right?
Yes.
So the thing about Bitcoin is everything's out in the open, so you can quantify systemic risk better, and then people can make better decisions, right? Whereas, your average American, they got a balance with Bank of America. They don't know what Bank of America's balance sheet is like, right? So I think this transparency aspect right away is an important thing. Two, Bitcoin needs a business model. So
what do you mean by that?
When the block reward gets thin in about 5 years, we're going to need the fee revenue to be significant. And so a lot of the transactions have been batched exchange withdrawals where people are zipping money in between to do arbitrage or to go speculate on shitcoins. And we saw when they started using SegWit that cleared up a lot of the congestion. And also the amount of TXs was very correlated to the price. So it's like the speculation. This is what no-coiners always, you guys are just a bunch of... speculators and you're
bunch of gamblers, drug using gamblers there.
Yeah. You're going in a circle, jerking around like that, right? But no, there's a real financial system that we can make, and having things settled in cryptocurrency does create a parallelism where you get independence there, while being able to maintain dollar denomination or yen or euro denomination or whatever you want. Really, I mean, it depends on ultimately the liquidity in those contracts. So, yeah, if we got a lot of settlements, so if we cannibalize this very high margin, not totally, kind of sketchy, not totally above board, centralized exchange business, and we factor it out into decentralized exchange. So we can get into side chains in a minute. That's how it becomes modular, and you're not going like...
No systemic risk.
Yeah, we're not going to... Well, there's systemic risk, but it's all...
visible.
It's modular to the side chain. If the side chain is going to offer 100x, they got to deal with their own clearing. We're going to set a 10x limit for the on-chain stuff. By default, if there was a spill, there would be like a socialization to keep the thing even. And then we're going to design the cash flows so that it's like the taker fees are lower than anything else. Half of them approx is a rebate, but if it was all rebate, it would be wash trade city, right? And that wouldn't be any good for the value of the data. I used to trade on OKCoin back before the party got stopped by the PBOC, right?
Did you ever get thrown into the wood chipper?
No, I manage risk pretty well. I mean, look, yeah, I've been liquidated a few times. I got liquidated on BitMEX a few times in early 17, but I learned my lesson. And when I was starting out, and I had like $500 in an Oanda account, like I got margin called like left and right. You know, you got to take your licks to learn, to have your brain like soak the lesson up, right? So. Can you reorient me a second? I just kind of lost.
No, yeah, let's reorient.
Oh yeah, no, I remember seeing like prints on OKCoin CN back in 16, where like 634 bitcoins would hit the tape, and I didn't see it hit the book. Right? It just like that's wash trading, right? So then OKCoin's volume looks fabulous.
Yeah, if you go look, if we pull up Bitcoin, we'll pull it up right now. If you pull up Bitcoin, is I think one of the few resources that still has like this information. Like, look at the volume back in 2016. OKCoin's leading it. OKCoin had 70.7 million Bitcoin contracts traded, apparently, in February 29th of 2016. But what stopped it? China clamped down on them, right?
China. Well, and also like there was the China premium. So I was working with Brave New Coin on a Bitcoin index. So I was trying to figure out some math to discount that. What's the like real value of that? So I was chopping it down by about 10 or 20x and weighing that in with like like Coinbase or something like that, where you're paying enough of a fee that you better know what the heck you're doing because you're paying like 25 basis points for it. And yeah, market structure's evolved since then, right? So then for a little while it was like Bitflyer that was leading the market, and they had zero fees, but they're like more regulated. And then at this point, when I look at different trading pairs and I'm trying to like kind of watch what's moving so I can click the other thing, you know, over on Deribit or something real quick and take a trade on it, I look at Binance Tether. Mm-hmm. That seems to be where the heat map is right now, and maybe BitMEX to some extent is like the tail that wags the dog.
Best liquidity.
Right. Well, and that's the advantage of derivatives, right? Is that you get the leverage, and then people who know what they're doing can quote pretty deep, and so you get more liquidity in the derivative than you do spot, right?
All right, wait. So to recalibrate here, I feel like we've been talking like two traders who know what they're talking about. I feel like we may need to dumb it down a bit for the freaks out there. So yeah, let's explain it like I'm five.
I want to offload my risk. And you want to take your 0.1 BTC and...
What is your risk?
My risk is that the price of Bitcoin might go down.
Okay.
Holding Bitcoin. And I don't want to sell it to the bank. You know, I don't want to get into the banking system for whatever reason. Maybe a perfectly legitimate one, which is I want to be in control of my money, right?
That's not legitimate. You can't do that. You need the nanny state to do that for you.
Yeah, right. Well, I think it's a fundamental human right, and that's why I'm.
Well, we're gonna get
enough of a Bitcoin maximalist to be working on Bitcoin.
Enough of. We're gonna get to "No hay futuro sin libertad."
Oh yeah.
Eventually, I very like that quote.
Yeah, but I can go all over. Yeah, the dystopian dynamics here.
Yeah, we'll get. But before we get into the dystopian dynamics, explain it like I'm five. You're trying to offload risk.
Okay, so I've got a Bitcoin. And I sell, and Bitcoin's trading at $5,400. So I sell 5,400 contracts. And my counterparty's some guy who might have one Bitcoin and he wants to double it up, right? Or he might have 0.1 BTC, right? So because it's inverse quoted, like normally when you short a stock and your collateral is dollars, if the stock doubles, you're out, right? Mm-hmm. You get margin called, you beat. So shorting's kind of a blood sport for that reason. But if your margin is Bitcoin, then this is where the magic happens. So if the price doubles, I don't get margin called. I just have half a Bitcoin, which is worth the same amount of dollars, right? Plus whatever interest swap yield. Interest is for that, right? This is a little different. So whatever swap yield I've received, I'm going to have the 5,400 I had originally plus some of that yield, right? And then you, my long speculator friend, are going to be up 0.5 BTC on that double off of your 0.1, 0.2 BTC that you put up originally, right? So, and then you're in dollars, you're really happy, right? Mm-hmm. So, the flip side, to be exposed to that possibility, you have to take the risk that you're going to lose that 0.1 BTC, right? And then in theory, if I'm hedging like this and Bitcoin goes down to $2,600, it gets cut in half. Now I have 2 BTC, still worth $5,400. With BitMax, you'd probably have some negative funding, right? So I'd be off a little bit on that.
So let's talk about the two traders in this trade. They have different units of counts that are trying to earn value in, correct? One is worried about the USD unit of account. The other is worried about their Bitcoin.
Yeah, one is trying to make sure that they can feed their kids or whatever, and they're not so antsy. They're not so gainsy. And the other one is
stacking sats.
Trying to stack. Well, they're risking sats to stack sats, right?
Yes, yeah.
And it's a beautiful call to adventure in a way. It's kind of addictive. So I used to do that when I was younger, and then I got into my 30s. I like more the hedge part of it, right? But
before we go on, are you a trader or an engineer or both?
Yeah, mostly trader. I did study computer science a little bit when I was at Virginia Tech, but then I hopped over to do creative writing. Okay. So
what is your life? You're an American living in
Chile.
In Chile.
Yeah.
You've lived in Argentina.
I've worked as a game designer. I wrote a novel when I was 17. I started writing sci-fi stories again recently. So I'm like kind of a creative guy. I understand technology. I do JavaScript, so I can lift some things. Mm-hmm. I'm not the best coder. The guys I hired code in C++, and I'm like, I wish I coded in C++, and I could get a lot more work done. So I'm like kind of a generalist in some levels.
Yeah.
Writer, trader, designer.
Into Bitcoin. It's fascinating. Again, like I said, I've only been exposed to your tweeting for about 6 months, and just even on Twitter, you're fascinating. Meeting you in person is even more fascinating. So, like, how did you?
Thanks, man.
Before we get into more Bitcoin stuff, like, how did you get enamored with Latin America?
Well, I like the ladies, for one thing. So yeah, my wife's here. She's Chilean. I think she's a cutie. And I was interested in the possibility of in the Southern Cone in particular. It's like, oh, hey, it's just like North America climate-wise or Western Europe, and it was cheap. And I wanted to make video games with like $8,000. I wanted to make a video game with $8,000, you know. Mm-hmm. So what am I gonna do? I ended up working with some Argentines, and for $3,000, I got a whole game worth of art, which was a pretty good deal. So then I was hooked, right? So I went down there, I spoke at their video game conference in 2007, went around to some different companies in Buenos Aires, picked one, worked for them. Then I worked for a company called Voss2, which was run by some Harvard Business School guys, and they were copying Zynga games to Brazil. And the CEO once told me that he wanted zero innovation. And I said, well, how about basis points of innovation? And he's like, oh, let's just play it safe and stick with zero. Because I'm trying to, I'm doing the numbers, and I'm like, well, this would be better. They wanted.
He's like, this already works. Just
they wanted the carbon copy. So they ended up getting sued by Zynga, and I think they settled for like $5 million for copyright infringement. So that strategy kind of backfired. But that company was briefly valued by Tiger, I think it was, at about half a yard, as the traders like to say.
Half a yard.
Yeah, because then it's like not a big deal. You're talking about it. No, it's a yard. It's just a unit of measurement, right? Mm-hmm. That's the trader mentality. Oh, no, it's $1. It's $1 million, right?
Yeah.
Like, don't worry about it. But so I got to see the boom and bust cycle in social games, and it was kind of like ICO mania. The vibe of whole, okay, like these people are stupid. We're gonna take their money. Like, let's go get it. And, I was like, well, what about the craft of game design, So I teamed up with this guy, Nat Jacobson, who left Facebook, and now he has a fund called Spark. And I was going to make some games with him. So I worked for King.com a little bit. I helped them make a game. I was producing it with some Argentines. And then they canceled that. They later went on to make Candy Crush and made billions of dollars. Guy I worked with at Voss2, not the CEO, but the sort of the metrics business numbers guy. He started a company called Oscar Health with Jared Kushner.
Oscar. Yeah, they're here in New York.
Right. So he taught me a thing or two. He was a pretty smart guy.
I actually applied to a lot of product manager jobs at Oscar back in the day when I was still trying to break into that.
Oh yeah.
That role.
Yeah. So I ended up veering into some product management stuff when I was in the social game industry. It's cool. You analyze the numbers, optimize things. Like it's but there's some aesthetic sensibility about it. So yeah, I like product management.
And you've landed on Bitcoin.
Yeah, man. I think Bitcoin. Like the passion that the Bitcoiners have. Like I definitely have. I'm loyal to Bitcoin.
Do you believe you believe in its endeavors to become the world reserve currency of the world?
Yeah, I think it has a good chance of being a $5 trillion asset like gold, for one thing. And then it could sure have a higher real yield associated with being in that ecosystem than being in the SDR ecosystem that they're going to be pushing, where the
baskets.
Yeah, but everything in the basket's got a reference rate that's under 0. Like, that's what we're looking at, I think. So I think we'll be able to compete. But we need some features, man. We need people to have some optionality, some flexibility. They need to be able to have a portfolio where they could actually base a lot of their money. I'm not going to say everybody like go into decentralized dollars and be in big. I mean, I know a lot of y'all are just straight up long Bitcoin and cold storage, and you chip off a little bit, or you use a Bitcoin credit card or a normal credit card, and you pay it off periodically, and you try to live frugally for the HODL, for the long-term time preference. And I think that's great, but not a lot of people in the world can afford to do that, So if your cost basis is $200 or $20, and you're like rich on paper, but you're sticking to your principles and your lifestyle, that's great for you. I respect that. I, in my own entrepreneurship, have run a very scrappy, sort of budget myself. I live in South America. My rent's $600 a month, so I'm all about that. But people who have little money can't afford to be all in Bitcoin, So if they could be in a blended portfolio and they could be like, maybe I'll get some interest and that would be nice. That helps me with passive income. And then, people might, so I think if we onboard peeps in a safe way, in what they perceive to be psychologically safe, which is going for the yield, but then they got their foot in the system, and then all of that. So what happens is people buy spot, and then they sell the deriv, right?
Wait, so let's for the freaks out there, what do you mean by buy spot, sell derivatives? So
spot
what is the little man doing?
I got cash money in the banking system. I go to Gemini and I trade it off to somebody. That's spot. It's when you're using cash, right?
Yeah.
There's no leverage. So now I have a physical Bitcoin, in the sense that the private key configurations of all the Bitcoin addresses is a physical electrical configuration that gets replicated and all.
You have a call. Physical, you have a call and some UTXOs.
Right. Yeah. There you go.
Yes.
Yeah. Through your private key, right? So you physically you own the underlying Bitcoin spot, and then you hedge it, so you have this dollar position, right? So in the process, that creates this little uptrend, maybe, right? Soaks up the float. There's less Bitcoin available to buy because people are trying to peg it at different dollar levels, right? So of course they're losing Bitcoin as it goes up, but they're earning dollars, so they're kind of happy with that. And then as we fill in that cup and handle, and then we pop that top, right? We get over whatever resistance, we pop 10K or something. Then people go, oh, maybe I should go 50-50 or something like that, right? So then it starts to, then the premiums go up in the process, right? And everything starts to get zany again, which should be fun.
So you're trying to create a product to make this easy, so people can have sort of digital synthetic U.S. dollars that they can use whenever, and then if they need to quickly switch over to Bitcoin, it's made easy via TradeLayer.
Yeah, so we have a DEX that's an improvement on the original Omni DEX where you could trade Mastercoin for TradeLayer, and it was like kind of one way.
And that was used for Pepe Cash too, correct? Or no, Pepe Cash, but
that was on Counterparty.
That was on Counterparty.
Yeah.
Yes, yeah.
But yeah, Counterparty had something similar,
yeah.
But it was a bit clunky. Yeah, so we've tuned that up so that's a bit smoother, and you can actually post a bid, and then you can trade spot on the DEX, Bitcoin to token. So I want to be totally upfront with everyone about the trade-offs, unlike a lot of people who hit people up. So we're creating a metacoin on Litecoin and a metacoin on Bitcoin. It's ALL on Litecoin. It's total on Bitcoin. So it's kind of like Omni. But instead of being an ICO, here's a tranche of coins. Good luck, everyone. It has its own economy, right? So there's a liquidity reward. People earn some posting orders and getting those filled, and to get the ball rolling, because we're starting from zero, there's a node reward. So I came up with a mechanism where you can signal that you're running a node and get paid for it in this coin, right? So the trade-off is, of course, you're not using raw BTC for these trades. So like Blockstream recently just did a contract with their friends in Japan at Crypto Garage, where you put Bitcoin in a multi-sig. There's a Schnorr sig off chain and a secret reveal. This is called the Discrete log contract. It's discrete in the sense of discretion, not in the sense of discrete math. So the benefit there is you're using Bitcoin directly. The trade-off there is that clearing it is really hard. So how are you going to flow that across a whole chain? So maybe we can get into Lightning Network derivatives, right? So this is what's going to grow beyond TradeLayer as I set this precedent. Trying to be like magnanimous and move the science forward. I see Lightning Network achieving something, possibly implementing a version of our peer-to-peer graph-based clearing algo in the Lightning Network, so that path is actually how the checks flow as you settle in the, you could swap Bitcoin in the Lightning Network and then you're dollarized with Lightning, right? So I think that'll happen. I think Mast is going to make that possible. So I see the future. I'm not like, oh yeah, buy my shitcoin. It's going to be the next big thing. Bid it up to 20 BTC. It's going to be fine. No, don't bid it up to 20. Don't bid it up higher than the value of Bitcoin, because then that creates weird distortions. So don't do that. I see the value post Mast as being people who aren't like Bitcoin maximalists might prefer just having a dollar unit in cold storage, and B, it creates this endogenous price reference, right? So if you get enough volume going on and there's enough orders placed so that the cost of manipulation is quite high, you can infer the price of Bitcoin triangularly from its on-chain trades against this orbital money supply, right?
All right. I'm still trying to grasp this concept. So it's run with side chains, correct?
So by default, you can just do stuff on chain, but there's problems with that, right?
Yeah.
There's adverse selection, costs, and miners could fuck with you, right?
Yeah, I think where I get caught up mostly with this, so let's bring Tether back in again.
Yeah.
So like Tether, like with their US dollar collateral on the other end, like they've had to prove that they have the dollars in the bank account. So with TradeLayer, so you're creating synthetic US dollars that are similar to like DAI or something like that, and how does that become connected back to MeatSpace, or actually connected back to the US dollar system?
So people are paying a certain amount of dollars for Bitcoin. People can trade for the native coin, and then you get some data so that the native, like say ALL LTC contract can settle in a fairly reliable way. You get the supply of synthetic Litecoin, so then it's a bit cleaner. You trade synthetic Litecoin for Litecoin, right? And then you get the supply of DUSDs, and then you could just be using that as a way of paying for things, right? So it can tie in physically. My dream is to have like a money changer on every corner. People are running kiosks and they're selling cigarettes and they reload your card.
Like an Azteco.
What's that?
Like an Azteco-like vision.
I'm not familiar with Azteco.
That's what Beautyon's working on. It's
okay.
You can go. It's like similar to being able to load up your burner phone with minutes at a bodega or something like that. Being able to go buy $30 worth of Bitcoin,
right.
And redeem it.
Yeah. So I want to percolate that out, and then people are of course going to be able to choose. And I see Bitcoin ultimately being the dominant money, and with Mast, you're going to be able to try and replicate this auto-magical clearing process with a little bit more fine-tuning. You got this tree of signatures that can handle different scenarios to pay it out. So
let's talk about Mast. Merkleized abstract syntax trees.
Yep.
Correct.
Or signature, I think.
Signature trees. And this will be enabled via Schnorr signatures. And the way I understand it is that you're basically able to just dumb it down for everybody, like able to store a lot of data in one little Merkle root.
Yeah, well, the idea is you're staying in the UTXO environment, but you add some programmability rather to it, right?
Yeah.
And then the other thing is like Lightning Network has this issue with watchtowers, right? So to make Lightning Network secure, you need a watchtower to provide the service, and then you're trusting the watchtower, right? And if you have Lightning derivatives, you still have the Oracle problem. You need to rely on an exogenous data feed in order to settle those, right? Unless you have on-chain data and it becomes endogenous, right? So, all right, so let's get into sidechains for a second. So, big problem with Bitcoin is that, and I'm not like, we're solving all the problems with Bitcoin and with our altcoin. No, like the problem with Bitcoin is pseudo-finality. and you can have reorg attacks, right? And this is why the sidechains research at Blockstream, where it was proof of work sidechains, didn't work, because you get into this recursive nightmare.
You're just dependent on the miners not stealing your Bitcoin, correct?
Yeah, well, that's more like drive chains,
Yeah,
which is also a bit too much game theory.
Yeah.
So the way I look at it in this space, like when you're designing these systems, an ounce of mechanism is worth a pound of game theory, you know? So what we're trying to come up with is a mechanism where if so the kind of sidechain that I think really fits is something like Tendermint, which is my former acquaintance Jaquan's innovation.
And this is via off the Cosmos chain, correct? Or
No, not necessarily. So Jaquan invents this algorithm that's pretty good. It's a
what is Tendermint? Yeah. So
so it's like a purification of some insights from the 1982 paper on Byzantine fault tolerance, where they realize, 2/3 is about the threshold where you're safe in whatever protocol, and they were trying to theorize about the space of algorithms in general that could do that. Right? And then we got things like Paxos, where you can coordinate, without the Byzantine aspect so much. So what Jay did is he kind of boiled it down to the minimum amount of validation that you need to create this 2/3. Assuming the 2/3 are legitimate, you can have them all going around signing blocks. And of course, Jay's biased because he thinks the proof of work is this environmental cancer.
Jay, it's a boom for environmental energy efficiency.
I think so. Yeah, I'm more on the Team Bitcoin with that, right? Like I think Nick Carter's done some good analysis on disproving that claim. But likewise, the Blockstream guys were in their own ivory tower thinking it's got to be proof of work, right? So that's why that became a dead end. So the kind of one-winged angel form of Bitcoin, its final form, I think, and you can do this permissionlessly. You don't have to do a soft fork or a hard fork to accomplish this. You can just have these channels, people who are running the sidechain with Tendermint. They're the validators.
HTLC or
no, it doesn't have. Yeah, HTLC fits in
Lightning, but
with we can get into that in a minute and the option value around it. That's kind of interesting, but. You just have these multi-sigs where the pub keys are congruent to what was used to create the Tendermint chain, right? Mm-hmm. So you got your validators representing down to Bitcoin. That's the bridge. And so let's say you go deposit Bitcoin to them. And then it's like, well, what if they just ganked my Bitcoin, right? This is the two-way peg problem. Mm-hmm. So what among other applications, what we're trying to do is have a proof mechanism where if there is a Byzantine failure on Tendermint, there is a 2/3 collusion, and they go mint to block where they like rob all of your validator stake, and it's way out of bounds of what is appropriate for slashing. And there would be like a template encoded in the TradeLayer logic, and so you have your state from that channel, which is like just a signed transaction. You don't have to spam the blockchain with these. You're just kind of holding it as insurance. So you throw that down on the table. You cook up a Merkle proof to link that to the alleged bad block with the hash of that and the contiguous data. TradeLayer, we're not quite there yet in the protocol, but as we fill out the roadmap, the logic of the protocol would parse that, and it would say, that's bad or that's okay, right?
So you have like an FDIC insured sidechain?
It's almost like fast arbitration that happens on Bitcoin. Mm-hmm. Or on Litecoin, as we're going to launch on Litecoin and then circle back to Bitcoin later.
Is Litecoin Bitcoin's testnet, do you think?
What's that?
Do you think Litecoin is Bitcoin's testnet?
Well, that, and it's interesting because anybody who talks turkey about the block size and when do we raise the block size and all that, well, you've got Litecoin as effectively a 4 megabyte throughput chain. So let's get the demand filled out like in 2017 on Bitcoin, and then you could fill up Litecoin. And then, maybe we could have a conversation about this, right? But until then, like it's there as like the lightning rod, if you will, the grounding circuit of that extra demand. Mm-hmm. And I have speculated about how Lightning Network and cross-chain swaps might enable routing. So if we are in an environment where you've got to pay like $150 to get your Bitcoin confirmed in a block or a few blocks, that you could just cheaply paying the counterparty value adjustment to do the swap over, which we'll get into. You swap it over to over to Litecoin and do the transaction there for less, right? And then maybe we'll be in an environment where everything's like crazy value, $100,000 Bitcoin, and the backlogs are 100,000 transactions, and Litecoin's filled up And then, I don't know, maybe the Decred guys are going to start looking credible at that point, right? But they might be in the Lightning Network too, right?
Well, that's what I was about to get to. It seems like you're trying to create like a quasi POW POS combination.
Yeah. So what Decred claims is that they have this 90% threshold because in addition to the 51% of the hash power, or realistically it's more like 30% to do a selfish mining attack, you also need to have a lot of stake in Decred. So therefore you have to it's like very secure, right? So it's a nice claim. I think it's
3 times more secure than Bitcoin, according to some people.
Well, there you go. That's just math, right?
Yeah.
But there's something there, because if you have pseudo-finality on Bitcoin, but it's very like Mr. Dink and Doug would say, very expensive to break it, right? And then you've got this sidechain with instant finality. You can cache your signed transactions on the sidechain. And then if you have a good proof mechanism to hold them accountable in case they break, you kind of get the best of both worlds.
And you can reward people for caching that on the sidechain.
Cache as in C-A-C-H-E.
Yeah, C-A-C-H-E.
Yeah.
Yes.
And it works for Lightning Network. It could be like
So
the third layer to Lightning Network.
Would be analogous to staking? Almost.
No, staking would be what you're trying to do as a validator. Mm-hmm. But if you're a user and you just sign like a zero conf payment over, or you're depositing your Bitcoin and you want to have some insurance, well, that's a little different. Or you're doing a trade and you want to have instant fast confirmation. If you're able to hold those guys accountable and they have like a 1 second block time for a globally distributed Tendermint chain, or a regionally distributed one might have like a 100 millisecond block time for the latency theoretically, or maybe a little bit tighter than that. Then you have a decent assurance, right? And of course, you need to be like 3 or 4 blocks deep in confirmations to have that same level of assurance just in naked proof of work, right?
Yeah.
So I believe this will really allow Bitcoin to spread its wings, because now you can do things on chain, you can do them off chain to some extent, right? To where the extent that it's economical, right? So you could also like pledge your money to the side chain, trade your heart out. Maybe they have a good clearing engine to manage their risk, and they let you have 100x leverage, and their fees are super low, and you get the fast conf on all those trades. So you trade for a month, and then you order a settlement out of there, and then they don't settle you. So then you throw down the doom, you throw down your proof of Byzantine failure, and you get settled that way. So the issue is before we have mast, let's say I'm putting Bitcoin on a multi-sig so I can go trade on sidechain MEX. It's like the more decentralized BitMEX, right? And then they gank my coin. They just the transaction goes out. All these Bitcoins just moved out of the multi-sig because there was this collusion, right? Mm-hmm. So if I can prove that, and they've staked a bunch of synthetic Bitcoins that are hedged with an on-chain contract, then and with some threshold of over collateralization, maybe 50%, maybe 20%, it depends, right? So there's sidechains can be competitive in broadcasting. What's their quote depth? So they're going to be staking to be held accountable for that on a block by block basis. And in these parameters, like if it's a Bitcoin custodial sidechain, how much extra synthetic Bitcoin do you want, right? So then if the TradeLayer contract is in deep backwardation, like 30%, which is probably not, it probably wouldn't get that bad, and it's a 50% over collat, then okay, it could be messy in the unwind, right?
Right.
But people could come out of that hole. And then in the future, I think Mast might be able to affect the same kind of guarantees.
Yeah.
So maybe in the future, this kind of proof could plug in to as like the break this in the event of an emergency, push the red button, part of the Mast tree, and trigger a payout that way.
Yeah.
Right?
It's
going to take a few more years, though.
No, this is the first time I've had a conversation with a Bitcoiner where like a lot's going over my head. I'm like happy. I'm happy about it. I am. I swear to God, I am.
Well, thank you.
Patrick, we need to distill this for the freaks out there.
Okay, distill.
We're
drinking Lafrague, which is pretty distilled.
We're drinking Lafrague. It's very distilled.
So we might as well do the same justice to everyone else.
Cheers again.
Yeah.
So are you creating an altcoin? I guess that's what the freaks want to know.
Well, an altcoin is like, forget about Bitcoin. Here's our blockchain.
Yes.
And then you've got the whole issue of, this altcoin better support a mining environment where this is a secure blockchain. And it's like, oh, don't worry about it. We're doing very innovative things in proof of stake, right? So like Jay's thought was, how do I monetize this awesome algo that I've invented that's moved computer science forward in an open source way? Create an altcoin, right? So they created Cosmos, right? And Cosmos is a base layer built on Tendermint. So I don't think Tendermint's great for being a base layer. I think it's great for being a sidechain layer. And Proof of Work's great for being a base layer.
I would agree.
So no, it's not an altcoin. It's a metacoin. And Udi Werthenheimer would make fun of me and say that I'm just bullshitting. But
Udi.
Yeah, Udi's a funny guy.
I like Udi.
Yeah. Well, I figure if I can pass muster with Udi, then I'm not doing too bad. But if I can't, it's not the end of the world.
Had the pleasure of meeting him in Riga last year.
In Rio.
Riga.
Oh, Riga.
Latvia.
Oh, right, for the Baltic.
Far stone's throw from Rio.
Sure.
Probably the much more would have been in Rio. Rather have been in Rio. For the weather. But
I was in Rio for La BitConf 14. I got robbed on the beach. And,
how many times have you been robbed in your life?
3. Yeah. No, it's always been instructive, I guess. Well, the instruction there was that Rio is not like Miami. You can't just go for a moonlit walk on the beach.
I hear you got to go to where's the southern coastal town in Brazil? Or it's not a coastal town.
Yeah, like Florianopolis.
Florianopolis.
Yeah, that's like a little bubble.
Yeah.
Yeah, she was trying to sell me on going
and
over
Florianopolis.
There, I don't really take vacations. I only take business trips.
Well, I'm very flattered that you decided to stop here on your business trip.
Absolutely. Yeah.
Let's get back to Udi's objection and what he said.
Yeah, so he would just say that like a metacoin is just some kind of bullshit thing that the ICO purveyors of the original ICO Mastercoin would say to dress it up. But no, there's a taxonomical, right? That's the word.
Taxonomical, yeah.
Yeah, there's a taxonomical distinction that's very meaningful. So it's native, he put native in quotes. That was the thing. So, I mean, it is native in the sense that it's born and dies if the blockchain were to fizzle to a halt like a white dwarf in the future or a black dwarf eventually, right? It lives and dies by the blockchain that it's born on. So Omni hasn't really done it. I mean, it did go banoodles during alt season in 2017, and now it's back at like 1-2 mil. But they didn't really do much with that. They never acted. I came up with this idea that there would be a fee distribution, right? They never activated that. Maybe they were afraid of the SEC because it was. I mean, technically, with the ICO, it's kind of a security ready, right? So. Yeah, so the thing about a metacoin is because it's native, it has the same kind of contiguity in history as the UXTO set. So we're going to have this monetary policy in the thing that is with ALL in total where, it's a little more inflationary than Bitcoin. It's not so inflationary like Grin because I think that was like way too deferential. And Grin's inflation
10 Grin every minute or something like that?
Yeah, right. So the first block... Well, say the first block, you get the first Grin. The second block, it's a 100% inflation rate. Mm-hmm. The next block, it's a 50% inflation rate, and so on, right? So it takes years for the annualized, and then the annualized inflation rate in 2019 is very, very high for Grin. And whenever you're creating something that has that relatively decent commodity, like decentralized monetary policy, where you just put it out and there's nobody like pulling the levers behind the curtain, Wizard of Oz style or Vitalik style, et cetera. That is, it's in the public domain, So, and then the other thing is that Bitcoin got all this value by having some seigniorage in excess, where the value increase from that incentive was in excess of the inflation, right? So I believe in that. I think that has potential. So that's why we've got like the liquidity rebate. And the thing is, all of these trades, right, to the extent that people are willing to pay for them, right, or they could batch them onto side chains and have these settlements more periodically if the fees go up, they add data to Bitcoin, right? So there's this whole this was back in 2014. It was Luke Dasher saying, any op-return code is spam. That was like the hardline position. So I met Luke for the first time at the last LaBitConf, and I was forced to confront his humanity, and I just had a lot of empathy for him. And so I just said, hey, I hope how's it going? I hope your business picks up. I'll refer you to anything I find, So I get Luke, I mean, he's like
I love Luke.
He's like an uber conservative Catholic. Like my interpretation of Catholicism is different. My interpretation of Bitcoin is different, right?
I think our interpretation of Catholicism is probably in line with each other. Luke's a hardcore guy. I went to a Jesuit high school. Luke would call me a heretic.
The Jesuits. Yeah. Well, I was trolling them a little bit on Twitter. I said, like, why is Luke having trouble making money? It's because of the Jesuits. They're stonewalling him. But no, I stopped trolling him. I stopped trolling people in general. We got Catholic married.
Don't ever stop trolling.
No, you got to be like a force for love and for positivity. I think is a better use of your time.
I agree.
Yeah, but a little light trolling that is a sort of Socratic dialogue.
Yeah, tough love is
that's
needed.
Respectful.
I think this world needs some tough love.
But like some guys have gone way over that.
Yeah, some people will.
Yeah, so I was.
How's my Twitter etiquette? Am I okay? Am I too?
No,
tough
you're
on
totally
people?
chill.
Okay,
yeah.
Good. Thank you.
No, and I think it's and even a little bit of hostility, you can undo a lot of goodwill. And like if I'm gonna succeed in getting this thing off the ground, it's gonna be because I'm like being a decent person and being honest and being amicable, I think. So yeah, we went and got married. I had this priest give me confession for the first time in like 15 years or something like that. Since I was 18 and I was in college, and I just kind of like dropped off of it. And then I circled back recently so we could get the sacraments because you want to get. Makes your marriage stronger. I don't know. Maybe. Couldn't hurt.
That's what they tell us.
And it was like the chillest priest that I had ever met. It was this beach priest, And we had to wake him up from his nap when we showed up to do the papers. And then he did confession. And I told him all my sins of the last decade or so. And he gave me one Our Father as penance.
Oh, one Our Father, that's
it's
it.
Just not even a rosary,
You've been a good Catholic boy this last decade.
I know. Well, no, he was just really lenient, you know what I mean? Because he's like, he was just kind of a Latin American beach guy,
Did he make you say it in Latin, Pater Noster?
No, my dad likes to do that in Gaelic. He's an uber Catholic, yeah. So then he did our wedding, and the music didn't work, so we did the bum ba like a cappella, and everybody was like giggling, and the nun said that it was like the most joyous ceremony because you get a lot of these like rich people from Vitacura that come out there to do it because there's like this old colonial style chapel, so it's like a very picturesque place to do it. But it's like the son of this oligarch and the daughter of this oligarch and. And they're gonna end up cheating on each other, but they'll stay, and then they'll do confession and they'll stay married, and it's fine because it all washes out. But okay, so the nun said that it was the most joyous ceremony, and yeah, my interpretation is like not so legalistic. I mean, obviously I don't go to church that much, so it better not be because otherwise I'd judge myself pretty badly. We have been going to church a little bit now and then. It's kind of a nice meditation.
I'm not even a priester anymore. I don't make it to church that often.
Yeah, well, we should go. Well, we'll go on Sunday for the wedding, obviously. Yeah, but I mean, you look at Jesus a little bit out of the orthodox. Here's a guy who had little money. He went around being a sex worker advocate, an advocate for the poor, right? Not a socialist because he didn't believe in Marxist economics, right? Because that didn't exist yet.
Yeah, it's like the crux of Catholicism is pulling yourself up from your bootstraps. It's very capitalist.
Well, it's also that like this old lady who could only afford to give like whatever the equivalent of like $10 back then was like better than the rich guy who writes a check for like $1 million, but it doesn't mean that much to him, right? So there's this like center right thing of like do it all in charity, and then the left would say, well, like it should just be systematically that people get the medicine or whatever. But okay. I wouldn't say he was a socialist, but he was definitely kind of a rad dude, right? And in the Gospel of Mark, which I consider to be the most grounded in historical fact, like Luke and John are kind of fanfic a little bit. There's a lot of it's like the Wizard of Oz. It's like a political, well, especially Revelation, right? Revelation's like the Wizard of Oz written in the first century.
Yeah, for all you non-Catholics out there, we transition between 4 books of the Bible, depending on what year it is, or the Gospel, excuse me.
Yeah, they do like a roulette.
Yes.
But I like Mark because it seems like pretty down to earth, right? So in Mark, he gets up, he's hungry, he's hangry, he's having some cramps or something, he's not in a good mood. He curses a fig tree because there's no figs. He loves figs. Then he walks into the temple and he sees everybody doing Forex. and he flips out and he flips the tables, right? Mm-hmm. And then they're like, man, you guys got to take care of this guy. He's messing with our financial infrastructure, right? So they execute him. By the empire, right? The state and the religious conservatives in collaboration put this guy to death for messing with their money biz.
Their usury.
Well, no, it wasn't usury. It was just,
wasn't usury?
And not in that instance.
Okay.
It was just that they were doing the Forex trading
in the temple.
In the
It
temple.
was in the place of worship.
Right.
So that was it. Yeah.
So maybe some Bitcoiners think that I'm doing the same thing by bringing derivatives onto Bitcoin, and Bitcoin's the temple, and you know.
This is how we're bringing it all back to Bitcoin.
Yeah.
So are you bringing Forex to Bitcoin? And so
Well,
it
sure.
seems like your intent is to solve the, I don't want to say unforeseen, but the expected fee pressure problem that may come once the block subsidy, right? The reward is the subsidy and the fees. So yeah, the block
and
subsidy
in the meantime, you could pay 2.5 basis points as a taker on an oracleized Bitcoin dollar swap, which is probably how we're gonna get things going early on. And that's well, Deribit's moving to 5 basis points. They're dipping their toes into that because somebody's got to compete, right? 7.5 basis points is way too much. So we're gonna take it even lower, right? And then when the native environment gets going and people are more comfortable trading that's 1 basis point. So I'm like trying to destroy all these dudes' profit margins, and then maybe we'll fill up some blocks, and then we'll have to modulate out to the side chains.
So as a TradeLayer user, what's my UX flow going to look like?
Well, we have a little wallet built in Vue, so it's kind of decent, and it's like an order book like you would see on typical exchange, and you type in your order and put it out there. And we have a block explorer, so you can check that. And then when we have... Well, so the annoying thing about doing things with an omni-layer style environment is you need UTXOs to get anything out, right? So you got to manage, having a little bit of Bitcoin or Litecoin on the different addresses. So we came up with a way where you can trustlessly construct a transaction with a third-party wallet hoster so that the wallet provider is feeding you the input, and you could have your layer property just on a Bitcoinless or Litecoinless address, and then they build the TX where they'll feed you the input with the outputs that you want, including the op return. And
you have to sign it or something like that?
You, the user, sign it. Yeah,
okay.
It's totally non-custodial.
So you're not constructing it; they're putting it in front of you, and then you sign it.
No, it's kind of like a 3-4 step handshake process. Yeah, so that's a way where we can generate a little bit of revenue that's not seigniorage revenue, the infamous revenue model, just from paying like 5 cents worth of Litecoin and getting 10 cents worth of layer property as compensation, right? So that's nice because it smooths things along. And then later on, when there are sidechains, the wallet should be able to key into one of those of your choosing, of course. And then you could get the fast confirmation back on the sidechain. So it's possible you could do like a hybrid trade, or you could just like deposit to the sidechain and trade your heart out that way.
So this be a little bit like the experience I have on a Casa node now, where I send Bitcoin to my Casa node, and then if I want to bring it to HTLC contracts on the Lightning Network, I basically fund a Lightning Network channel. This is what we're doing with TradeLayer. Is you put Bitcoin on basically you'd lock it up in a side chain, and then you'd be able to spend that Bitcoin and denominate it in whatever token is running on TradeLayer, and then use that on your decentralized exchange.
Well, if you're actually putting Bitcoin on a multi-sig address that's run by the sidechain validators, then you'd be doing it BitMEX style, where you're depositing Bitcoin and you withdraw Bitcoin, right? You don't have to mess with the other stuff, right? And then there's a number of applications for these sidechains, right? So ensuring zero comp payments is one. Doing a hybrid on-chain thing is another. I don't know if that's going to be as popular. Doing custodial Bitcoin is another. Pledging your layer property is sort of a cousin of that. And then longer term, it's nice because you want to have a Lightning watchtower that is reliable. And if they don't do what they're supposed to do, you throw down this proof of Byzantine failure on them, right? And then you get compensated that way. So they're really taking the risk as a watchtower. So
is this a way to strengthen watchtowers?
Absolutely, yeah. I mean, I could see on-chain and the ALL total environment being worth whatever it's going to be worth, and you get a certain amount of on-chain things, then the fees go up, people start modulating it, and then I think when Backed eventually gets their regulatory approval, which is going to be a more complex road than most people think, but it'll happen.
Don't hold your breath.
Sometime in the next year and a half, maybe, and so on, right? And they're embracing Lightning. I think ultimately Bitcoin is going to be the preferred wholesale finance tool, and I think if you're doing like Lightning Network derivatives, well, Lightning's kind of weird, right? Because it doesn't have its own blockchain, so it's kind of almost like state channels in a way, right? I mean, but there's payment channels, right? So state channels just add in more metadata that you want to be signing off on. But because it's bilateral in that way, the latency could be quite low. So you could get a lot of volume in Lightning Network derivatives. And then if TradeLayer is serving a good purpose in backing up these side chains pre-masked, so that you can ensure that, right? And also in that case, the watchtower is kind of like the local Deribit or the local BitMax. They're keeping track because people are using leverage in these things. Otherwise, going long, you want to have a little leverage, right? That's what greases the wheels, right? So then you got to manage the clearing risk between all those Lightning nodes, right? So ultimately, I could see, okay, maybe there's like $1 billion a day in TradeLayer would be great. SEC, this is not I'm not making a promise to anybody here. I would love to see that. And then maybe we have like $20 billion a day in Lightning Network swaps. And if the math around manipulating the feeds in TradeLayer, manipulating these markets to skew that is concave, so that it's like every basis point of manipulation costs like more and more money because there's a lot of guys standing with passive orders that you gotta plow through.
So you start disincentivizing bad behavior.
Right. Well, and like if I'm talking about like a $1 billion a day environment that's providing data feed to a $20 billion a day environment, the only way that's gonna work is if there is this concavity, right? So that's something that we might get around to with my math PhD on putting out a paper on that. I'm hoping that's true. I don't know, but we'll figure it out. We'll do some math, and if I'm wrong, then we'll publish that too. Whatever. But yeah, this might be how the ecosystem ends up looking when we go. Okay, let's say like Bitcoin is $5 trillion. Wow, awesome, right? So what's that like? It's like 100 B now at around 5K, so
it'd be like 330,000 or something like that.
Yeah, it's a lot of money. These are the sort of McAfee's still going to be eating his dick,
he's going to be eating his dick.
Yeah, he should have nuanced it more. But well, my co-founder and I were talking about this, and his theory is that he'll take one of those little cryo things that urologists use to treat sores, and like pinch a little bit of skin and freeze that, and then eat that. And that's technically eating your own dick, but with the added benefit that
like
you still have it afterwards. Yeah, but you get to satisfy that technically.
I don't want to know what John McAfee's dick looks like at this point.
Well, whatever. They all kind of look the same. It's
true.
It's like the least interesting thing in the world. Yeah. But yeah, it keeps the race going. Anywho, yeah, McAfee's having some troubles. I know a lot of older guys in their 60s and 70s who are interesting, but that guy takes the cake.
Yeah, meth will do it to you.
Well, no, he was really into the bath salts.
Oh yeah, bath salts. Excuse me.
The designer drugs.
Yeah,
that was like 2011.
Yeah,
come a long way since then. McAfee's been pumping a lot of shit coins. He's not doing bath salts anymore.
Oh, he went from bath salts to coin of the day.
I'm not sure which one is more problematic.
I don't know. I'm not sure which one's more addictive. That's the question.
Right.
The free shitcoin money or the invigorating rush of a bath salt high.
Well, I've never tried bath salts. I have tried taking a shitcoin that I was holding that just got listed on Polo or something and selling into the frenzy, and that is very addictive. And so this is if you're a founder, it's like, okay, are you going to try to be a leader? Are you going to be centralized? Well, no, I'm like going to publish this thing, and we might have a roadmap where we have some activations, and then we like drop the mic, and we're like, all right, that's it, But pretty much committing to the monetary policy, and so I went back to that spreadsheet a few times because you only get one shot, right? That's like the Satoshi style, right? And his monetary policy was pretty simple, so it wasn't such a. I don't think he overthought it very much, right?
I don't think he thought much about it. especially if you take into consideration the halvings and
it's rather inelegant, and yet it's
you have
elegant.
half the supply released in 4 years, and then.
But then we get these 4-year cycles. I mean, it kind of worked, right? So that was a simple enough.
Yeah, it's a great FOMO creator. I think.
Yeah.
There was no art behind it, I don't think, but I think it played out for the best.
In a way, it was artful because of how simple it was.
Yes.
Yeah. So my thing's a little bit more curvy, but because I've been doing game design, I can't help myself. But the other thing is, all right. So the way that we capitalize this for ourselves, me and my co-founders, and like I got like a few investors that are like small time, is we have a vesting token, which is basically like it's not a tokenized security. It's like a token that is a security, basically. So that's like closely held, and we can like sell that to accredited investors or Reg S guys, and that melts into the native coin as volume occurs on chain. So we have to actually make this thing go. And it's like a logarithmic volume scale, and it's like an S curve. So to get up that curve, we have to get up to like billions of dollars in volume.
So your incentives are very much tied.
Right. And it's like, why did I spend all my fucking money doing this and then make my guys spend like a month and a half or two like programming it to make it even harder for us to cash out? Well, I guess that's just how much I want Bitcoin Twitter guys to like me. I don't know. I mean, I think it's good design. I think it solves a lot of the problems that we've seen with these things. And then also, it's going to end up being a pretty small part of the ALL and total money supply by the time it actually does totally vest, Yeah. So that's where I'm trying to set the bar. And then also, I'm going on the record here. I'm going to take the Byzantine challenge, 2/3 of my founder position. I made money in 2017. I plowed it into this thing. It's pretty much most of the money that I got in the world at this point, but I'm committing to holding 2/3 of it, maybe not indefinitely, but for like 30, 40, 50 years. And I'm going to put my money where my mouth is and actually put these in time lock addresses.
Ooh.
And so it's
not
putting
just
your
money where your mouth is.
Yeah, I'm not just idly virtue signaling here.
Which is a very common thing in this industry.
Well, it's easy to write a check that you can't cash.
It's easy to write a tweet that you can't cash.
It's yes. Well, in the spur of the moment, yeah, absolutely. And maybe before I do that, I want to get to the point in the roadmap where we implement a forward transaction, so you can mark an address where any yield that accrues to the DUSD or any interest. So if we have like a lending mechanism and I'm holding ALL or total like long, I can put it up so that people can short sell it. So go ahead. You think it's a shitcoin, man? Pay me some interest and short sell my stash or other people's stash, but be on that order book. So that way I can get income off of that principal, but I can't like dump on retail, right? My grandkids maybe could dump on retail. I mean, by then it's like whatever. And I did a spreadsheet going out to like 2058 or 2059, looking 40 years or whatever it is, like 30. Yeah, it's like 40. Yeah, I'm drinking too much scotch to do them. Yeah. Yeah, it's like 40 years in the future. And plotting out.
The quick math on Tales from the Crypt's always bad, and it's May. So.
And so it's like Jeff Garzik said, it's built to last. But this really is built to last because it's on Bitcoin. If Bitcoin dies, my money dies, and also Bitcoin lives, but my thing doesn't that I've originated doesn't get anywhere. Then it also fizzles out and doesn't get any income. So, okay. So at least I'm relatively principled, I guess.
No,
how I'm trying to rep.
If you're time locking it, it's very principled. I've told people that I've time locked some Bitcoin. They'd be like, "Are you fucking kidding me, dude?"
Time locking takes some fucking balls, man. Yeah. Because it's like, I hope this is around. So you really got to believe it,
Yeah. No, and it's. So what I'm trying to get at is like, It seems like you're trying to benefit Bitcoin again.
Absolutely.
I'm still not completely. I don't completely understand what's going on. That's like where I'm at right now. Like in
regards to TradeLayer, in regards to like the macro.
In regards to the macro, so let's go back to shitting on MakerDAO and their.
Well, let's not shit on MakerDAO because like my friend Rick Dudley, who's one of the smartest guys in the space, and he could be doing some great things for Bitcoin. Somebody go fund him. Really smart guy. They're one of his biggest clients.
I don't want to say shit on MakerDAO, but I think let's not shit on MakerDAO. Let's compare what you're doing to MakerDAO.
Yeah,
because MakerDAO is the hottest chick on the block right now in this.
Well,
space.
yeah, because it's a native dollar unit on Ethereum, right?
Yeah.
So MakerDAO is a little bit problematic because you're not earning off of your DAI unless you go put it on one of these other services.
Seems like nobody wants to use DAI. It seems like everybody's just looking to get the leverage.
Well, that's a core use case. Or you could like put your ETH up and go pay your rent, right? And then you're leveraged that way. Yeah. So it's like the secured credit card model, which has also been catching on. There's a number of places that let you do that. Or you could take it and go buy more ETH, right? And then you're sort of taking a margin loan out. But the ETH-focused investors that I follow seem to believe that Augur and Compound and these other things will help it to gain more use, right? And that makes sense. Like,
this make bets in USD on all.
Well, yeah, I mean, this is what I'm swinging. Is like, yeah, you got a good dollar base, so now you go trade derivatives with it, and you do whatever portfolio you want, right? So I think that will help, but structurally they're problematic. So they've got this Oracle problem, and they've had this centralized federation of feeds, right? Now they're trying to decentralize, factoring that out a little bit more.
If you know how to do double negatives with the Augur oracles, you can really mess with those markets.
Yeah, I don't doubt it. And I mean, Oracle problem is a long-term problem that I think can only be solved with the game theory around putting your money on the table on chain and having that firm up the market. So like Rep has this thing where you got to vote, you use it or you lose it, like in 40-Year-Old Virgin. Is it true that if you don't use it, you lose it? Well, in the case of Rep, it is true.
Yeah, I've held Rep before. It feels like a big sandbag. I've held it in my hand.
Yeah. Well, if you own a lot of Rep, it feels like a bag of sand also. And, like when I saw everything that went wrong with Mastercoin, and it's like money fucks people's brains up, man. I mean, look at Donald Trump. Like, I don't want to be too polarizing. We already talked about Jesus. So why not? I think he's doing I think he's doing some good things economically for the country. It's hard to say. It's also hard to maybe the president doesn't really affect the economy that much. I like the tax cut.
I'm in the latter camp.
Yeah, but he's a guy who got all the money he ever wanted, all the pleasures he ever wanted, and his brain is trained around this, And if I had not invested most of my money in TradeLayer and I was just sitting on it and picking up basis points and playing a lot of PlayStation 4, I could have become one of these guys, right? Or if if I was like Calvin Ayre and I was getting a different crew of chicks, and every time I'm pictured in different countries, maybe that's not the best thing for my life or my soul, or my material consciousness, never mind a soul, whatever. But like. Maybe I should be a better person. I have a little bit of challenge in my life. Train my brain to not be totally like, oh, the pleasures, like give me the more pleasures.
Don't be a hedonist.
Yeah, and then these ICOs, it's like totally disgusting. I saw it happen with Mastercoin, and then you can't know what you're paid to not know, right? So like in the case of MakerDAO, they got the $600 million asset, and they don't want that to go down by $300 million. That's, they feel pretty rich. They would feel a lot less rich if it were valued what if it was $30 million? Probably that's a reasonable valuation for MakerDAO also, right? And then they've got this value capture thing. So I think MakerDAO kind of has the cart before the horse in what serves, the original ICO holders and the insiders who are holding Maker, which is pretty closely held. And it trades a pretty small float relative to its total thing. And then they voted to raise the stability fee again and again.
Yeah, it's at like 15% now or something like that. Right?
I think it was like 14. But so this is almost like negative interest rates, really. Like the whole idea of the IMF fixing negative rates so that everybody goes to restaurants more or whatever is pretty much the stability fee. It's like, but a little bit different.
The thing that confuses me with MakerDAO and DAI and what's the it's extended to other similar protocols. The thing that sort of stands out to me up to this point, MakerDAO in particular, we'll stick with MakerDAO. Like it just seems like enthusiasts trying to prove a use case in a use case that will not be used by the masses, which is literally the over collateralization. Like you need 150% collateral to get a commensurate loan from MakerDAO, which this is technology to help the masses and the average Joe. At least that's how it's marketed.
But it's not very capital efficient, is it? Right?
No, exactly. Nobody wants to put down 150% capital to get 100% liquidity.
So let's go to the swap example on BitMEX, for example, right? So it's inverse quoted. So you've got this convexity going against you if you're long, right? So if I buy a Bitcoin long on BitMEX and I have 1.5 BTC on the account, then my liquidation price is going to be, I think, closer to the 50% line, right? And unfortunately, your downside is like infinite BTC whenever you go long one of these inverse quota things, and that's how people can have the synthetic dollar, is that they don't have this risk on the upside, right? So the 150 number kind of has some cachet, but the difference is that when that guy gets margin called, somebody else can pick it up, and then my hedge is getting cleared through to that guy, right?
So there's an arb there.
There's this daisy chain going on.
Yeah.
Well, so sometimes it's quite good when you. I remember in 2016 there were a few dips, and you see these big red orders on BitMEX, and the number one trader on BitMEX that year, I think, made like 100 or several hundred Bitcoin off of a few Bitcoin.
Was it Angela BTC?
Might have been him, and his strategy was he just went mad leveraged long on those margin call stacks, and and that's some anti-fragility to it, that's actually profitable putting in that liquidity. But like the problem with MakerDAO is that your 150% is with yourself, for one thing. And the other is that it's like this loan thing. So like a swap, like doing things with a derivative, it like kind of releases energy, because instead of having to like actually like do a loan, you represent like the math of it, and it's like much cleaner, right? And then you can also have this whole chain of other peeps that get margin called one after another, and you're still sitting pretty from 6,000 to 3,000, feeling like you still have your dollars intact. So you could say it's capital efficiency. It's really more a problem about clearing, and I think MakerDAO needs to pivot to a swaps-based model in order to keep going. So the problem there is you've got this incredibly huge, you got 600 million reasons not to do it, right? Because then you would be earning on DAI based on whatever the prevailing swap rate is. So where's the Maker model? Where's the business model for Maker? Well, they could have a fee in minting it, and it could burn some Maker or something like that. So they could pivot to that, and probably they will. Like my hope is that the innovations that we put forth with the derivatives clearing catches on in Lightning Network and elsewhere, and my hope with the sidechains innovation is that it helps the rootstock guys like get their ship in order. I don't know if Blockstream will take advantage of it, but it might help them. Might help Cosmos, and then I think maybe these guys MakerDAO might figure out that you got to do it this way eventually. So good for them. People don't need to lose their shirts. I don't know, whatever. I mean, they're like so much richer than me. Those fucking guys. Like, God damn it. I don't know.
So, well, I think another thing the freaks would like to know is like, why did you choose to build on Bitcoin and not Ethereum?
I've just always been a Bitcoin guy, man, but more than that.
Is it ideology or practicality?
It's a little bit of both, but I think Nick Carter's done a great job detailing the fundamentals behind Bitcoin. So for one thing, you've got the brand. The brand is this, and Jack Dorsey appreciates this. Did you actually have Jack Dorsey come into this apartment, by the way?
No, I went to him.
I
went to San Francisco.
Yeah, sure.
I wish he'll be in this apartment at some point. Jack, if you're listening, the invite's open.
Yeah, so, Jack Dorsey gets it, right? And today I just bought bitcoinwisdom.com, which was apparently...
I saw that. I saw you tweeting about that.
Yeah, it was available, and there's like funny brand tangentiality to that. And the idea that there's no like oligarch behind it, which is kind of what makes BSV so fetid, other than like the impracticality of like 128 gigabyte blocks, obviously, but... That's very compelling, and it's like there's a lot of Christian guys who are in the Bitcoin maximalist sect, and I think that the reason for that is there's some analogy between like the Holy Spirit and the Bitcoin spirit.
The Holy Spirit,
like Bitcoin is something that's bigger than us that we can benefit from in a nice conservative way. Like it makes us money, we can feed our families by being hodlers. We're better off, et cetera. But also there's this altruism to it, and that was like what the Occupy movement had, right? And Bitcoin started to get real traction around that time.
Bitcoin's the true Occupy, baby.
Well, pretty soon Wall Street's going to try and occupy Bitcoin, and in the process make Bitcoin even richer, right? So,
what do you mean by that?
Well, it was Occupy Wall Street. So now I'm saying that as so this whole thing about the time value of money, right? So like everybody rails on the Fed, right? I used to be a gold bug. Oh, the Fed. And then I'm like in the Bay Area getting paid pretty well out of VC money, and I'm like, oh man, maybe Bernanke's okay. But what's the problem with the Fed, right? Is that they take what should be a global price discovery process around the time value of money, which is like the most fundamental price discovery process, right? So you had Nick Batty on yesterday, and talked about this. With the Lightning derivatives, I think you can get more leveraged, and there's different rates. So you've got the rate from like quarterly futures. You've got the like wildly volatile interest rate on the typical perpetual swaps, which is sort of at the like T-bill side of the curve. The interest rate floor perpetual swaps that I am working on will have much, you have the 0%, and then it won't be as high when things are good, right? So I would say that's even more like in the present, because you don't have to worry about like a drawdown from the negative rates. So these are time values that get priced by how much FOMO there is in buying the swaps and so on, right? And I think that is, even if it's relatively illiquid early on, I think that's superior to whether it's the maker holders or it's the Fed board fixing that value.
We're getting more accurate time value.
Yeah, I think so. And well, okay, so with like BitMEX swaps in the bull market, things were just wild, and it's speculative mania, and the Koreans are jumping in, the Japanese are jumping in. And, it's sort of like what time value needs to be for that day, like, and the rates were crazy. You get 0.375 in 8 hours on the upside, and then the market crashes, and then it's like negative 20 basis points on the downside, right? It's really wild. So with a more attenuated interest rate, what I call the grandpa swap, where you've got this interest rate floor, it's even more thoughtful, I think. It's very experimental, so we'll see. But
it's more emergent, too, as well. Right?
Yeah, right.
It's
well,
not
that's
the creed on the market. It's more derived from the economic activity on the network. It's not 12 dudes in a room being like, here's the rate.
12 Angry Men.
Yeah.
The famous movie. Yeah.
By the way, attenuated, great word. Haven't heard that one in a while.
Oh, yeah. Well, there's front running, right? So then, indexes do their rebalances on a 30-day window to attenuate that.
Thank you for saying front running. This is a question I need to ask you because you're running a DEX. Miners front running on DEXs.
It's a problem at some scale, right? So that's why you need the side chains.
So let's jump in. Yeah. So let's jump into the problem. So would this be a hypothetical problem like 0x or Uniswap, where the miner is aggregating the transactions, can see what people are trying to trade within those transactions?
Yeah, I call it a relay attack, where they don't relay your TX and they spit one out instead, right?
Right. So
and that doesn't even need like selfish mining or anything expensive.
How would you describe this situation?
Like when you put out a transaction to Bitcoin, it spits out the 8 nodes that your node is connected with, or it goes from your front end wallet client to some server, and their node spits it out. And then they do the validation, and then they spit it out to 8 others, and it percolates. And there's a certain number of hops. There's the speed of light as a limitation, and then it takes a certain amount of seconds to get in through enough nodes that you're, quote unquote, in the mempool, which is kind of a moving target, right? So the original Omni DEX matching is based on mempool timestamp. But it's not atomic until you get the confirmation.
So mempool timestamp is that, and that's like, so we're talking about putting transactions in a block, just in a normal block, but the mempool, that's sort of contingent on any particular node too, right? Each node has a particular mempool.
Right. So if I'm a miner who's also a trader, and I have a different client that has a little bit of a different logic, I don't relay those transactions. I go, oh, here's a good front run, I'll take that instead. And then if you're trying to support liquidity in the market as a passively quoting market maker who's quoting all the time, in addition to the cost of canceling and replacing that, you have adverse selection. So people aren't trading with you too much, generating revenue when things are quiet. And then when the market moves, people are trying to pick you off for however many basis points they can. So I think early on you could do it raw and you could get a little bit of liquidity. Ethereum with lower block times, I used Ether Delta back in the bull run when I was flipping them shit corns. And, it's still kind of a clunky user experience. And with Litecoin, it's even slower, but it's better than doing it in Bitcoin blocks. So, yeah, I mean, I'm trying to keep pushing for it. I brought in a new developer who's on crypto Twitter as a sort of centrist skeptic. I won't drop his name. But he's a pretty smart guy. So we're going to try to keep moving forward with this proof of Byzantine failure thing. I was just talking to Rick Dudley yesterday about collaborating. Vulcanized DB is doing some two-way peg type stuff. Mm-hmm. So that's interesting. You should bring him on, man. He's a really smart guy. So yeah, I'm gonna start reaching out to more people and just make sure I can get this thing moving. So later in the year, I guess we can get sidechains out. So early on, it maybe doesn't matter that much. It's all very experimental. But yeah, you need the sidechain confirmation and the caching aspect of that to ameliorate these weaknesses in the raw infrastructure.
Yeah. So where does this all end up in your mind? Do we end up in a world of thousands of shitcoins? Do we end up in a world of Bitcoin and thousands of sidechains?
Yeah, more of that, I think.
Yeah.
Maybe I don't know about thousands, but definitely dozens or hundreds.
Yeah.
Well, what I don't want to live in is a world where you can't even go buy a cupcake with cash because they're afraid of being classified as a money transmitter. You know what I'm saying? Or a world where it's like China's one belt, one road, dominating Africa, dominating Central Asia, influencing Europe, doing real-time tax excise, and
real-time
seizing all of your money because of something you tweeted, or they don't have something you put on Weibo, I guess. And then Brussels, more in the mainstream, because China. You go, China. Well, okay, China's its own thing. I mean, they're going to encompass like a proper 40-odd% of the world economy before too long. But okay, we're not China, right? We're good Americans, right? So in Brussels, they've been behind common reporting standards, mm-hmm. Which is probably better than FATCA, because FATCA is very American exceptionalism oriented. It's like, you got to give America the tax info, but they're not going to give you any tax info. So common reporting standards is everybody in the OECD does this, right? Mm-hmm. So if you're doing any kind of financial business, you've got to KYC everybody, right? There's no more of this do a Seychelles thing and blah, 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 right? And the classic thing is Wyoming or Nevada LLC, where you're this nice American financial services guy and your client is some Chinese guy or whatever. And it's a single member LLC, and they just put their money in there, and then you can help them invest in stocks or something, right? So the IRS in 2017 started forcing you to report every inflow and outflow of that, just in case they want to join CRS later, which under Trump is unlikely, but because Trump is no, America should be the number one tax haven in the world. Of course, it's good business, right? I mean, that's the Trump mindset. I can't argue with it. It's the lesser of two evils. Of course, morally, should people be able to embezzle money through corruption and then go get into Vanguard funds and sit pretty?
Or sit in New York real estate or whatever?
Sure, Vancouver, whatever. Yeah. No, I mean, it's a reasonable idea that people should have some accountability if you're paying taxes. But it's a slippery slope, right? So what if we get to common reporting standards for trusted computing? Because now you don't need accounts per se. You just need to run a Tendermint validator, and you can be doing things for people. Well, no, we're gonna get every server farm in Seychelles to have a certificate, and we can end up with this panopticon internet in the name of people paying their fair share, right?
That seems somewhat impractical, though. How practical is that?
I hope it's very impractical, right? But you never know. We could be there in 10 years if we don't do our job as Bitcoiners to move the needle in the direction of financial sovereignty.
All right. Thank you for saying that. Let's wrap up on this topic.
Yeah.
No hay futuro sin libertad.
Yeah, well, that's it, isn't it?
And how are we doing? Do you think we're doing okay?
Man, I don't know. So in 2014, I'm hanging out in System D, living off of cash and Bitcoin. And, the Argentine government was the enemy, right? They were making everything hard, but they weren't enforcing too much. They didn't really have their data game together. They did start requiring KYC from my man Dante, and then he exit scammed in late 2015, I think. So it's a good time to exit scam is when the KYC overheads start building up. And back then, it was like, yeah, System D, it's going to be like in Africa, it's going to be in Latin America, it's going to be this cash economy. And then you fast forward 5 years, okay, so Common Reporting Standards is out. You know, the internet panopticons rolling along. There are meshnet projects that are very promising.
Shout out Gotena.
What's up?
Shout out Gotena.
Yeah, Gotena, and there's a few other ones. Orchid is another one.
Orchid, yep.
So that's very, very important. That's like strategic, right? So that's a ray of hope. But the slow, boiling frog scenario of centralized bureaucrats just tightening up on everybody's financial privacy, they've made progress in the last 5 years. And Bitcoin's made progress. Bitcoin got to be a serious asset. It got super liquid. It got all these financial services orbiting around it. It's going to absorb cool R&D from the Ethereum side and augment its technical capabilities. So that's okay. That's pretty good. But it's totally up in the air at this point. It's anyone's game. The game could go to Big Brother. Or the game could go to Little Brother, or Little Sister. Let's be feminists. Yeah. I think women are jerked around in the developing world. Their husbands take their money and stuff. So having financial sovereignty at a micro level, we're not talking about like the geopolitical chessboard. We're just talking about cultural.
Shout out our girl Janie Yak in Afghanistan fighting the good fight.
Oh, I should follow her. I don't know her.
She's a great advocate, a great Bitcoin advocate, a Bitcoin carnivore too.
Oh, nice.
Yeah.
Well, we're like flexitarian, I guess. Like we try to eat more plants, but that's where I differ from some of these guys.
I'm an omnivore. I'll eat whatever.
Sure.
As long as my gut doesn't get too big,
right?
I'm cool with it.
Yeah, just like less carbs is definitely smart.
Yeah, less carbs. When you come from Philadelphia where they got good hoagies and you're just eating turkey and bacon hoagies every day, Philadelphia is a fat city because of the bread. That's what I'm going to say.
Yeah, so I say there's no future without liberty, but in the like multiverse, like there are many futures without liberty,
but they're not good futures.
Well, yeah, I wouldn't want to live in them, right?
No.
So they'll be happy to execute me, I'm sure. Like I won't have to worry about it.
I'm optimistic, but I do think there needs to be like a more of a concerted effort, more of an awakening, if you will. I think more people need to wake up.
The fifth great awakening.
The fifth great awakening.
Yeah.
The fourth turning into the fifth great awakening,
Yeah, there you go. Well, maybe all the young millennials who are supporting socialism or they want basic income, and then if we got that, they'd be like, well, maybe I should like take part of this check and buy Bitcoin with it. Maybe we can, like, it doesn't have to be like, these are these leftist kids and these are these like Austrian libertarian Bitcoin carnivore guys. Like maybe there's something in the middle that can really appeal broadly, where our generation, in the spirit of undoing the corruption that we perceive in our forebears, we embrace decentralized finance as a way to kind of meet in the middle, right? Because it's not like oligarchic capitalism. A lot of the things leftists decry are the things that like libertarians decry as well, right?
Right.
And so I think this is the real middle path, moving the Overton window towards more liberty. And it's it's one of the best ways to do it. So we just got to keep plugging away, man.
Right, and it's not even. I feel like Bitcoin's like taking that back too. I feel like Bitcoin's very. It's not passive. It's very proactive. It's like you're proactively thinking like I fucking want financial sovereignty, and the only way to do that, in my mind right now, is Bitcoin. You could argue gold, but.
Or Litecoin, eh? LTC guys out there, huh?
No, screw Litecoin. Litecoin has not had any development for the last 6 months.
Well,
so that's one thing I'm worried about, Patrick.
We're doing some development on Litecoin.
That's one thing I'm worried about, Patrick, is a world of multi-coin shitcoinery that sort of bastardizes the glimmering ray of hope that Bitcoin presents,
Nah, like the good will out, the cream will float to the top. I would like to see a top 5 of Bitcoin, total, Litecoin, ALL, and then maybe Ethereum is still around, or Monero maybe Monero. So the guys at Tavi, they're doing like a layer protocol on Monero, and they're saying that it's in the spirit of selling tickets, right? But why don't we just do that on OmniLayer, right? I think it's kind of a Trojan horse, so they can get this kind of functionality going on Monero and have like a really.
Do you think Monero's too bloated at this point?
Well, I don't like this business of hard forking to
every 6
disenfranchise the CapEx investors that make your layer secure. It's kind of like Trotskyism, like permanent revolution.
Yeah, that, and then if we're gonna what's Monero's reason for being privacy? Like, are there enough privacy assurances if short signatures mass becomes a thing, like we were discussing earlier? Like, is Monero even worthwhile at that point, where you have so there is a threshold of privacy assurances that need to be met where I would argue Monero becomes useless.
Well, we'll see. I'm not that much of a maximalist, but I do think it won't be like thousands of crappy coins. I think it might be like a few. I mean, right, you got the dollar, you got the euro, and then you've got like all these pesos out there, right? So the shit coins are like the pesos of the world, but you still got the euro, right? And the euro's got problems. So euro might be like Ethereum, right? They got everybody like doing this governance dance to keep it alive.
Well, is this a product of the fiat system? And are we extrapolating ideas or frameworks, mental frameworks of the system we grew up in into the system that we're building?
So you're saying we're all too spoiled by growing up with banking that
no, I'm saying we view the quote unquote currency competition that exists in the traditional financial system, euros, yen, dollars, and we analogize that to currency competition in a Bitcoin world, where I would argue that in a Bitcoin world it's completely different, because these currencies in these given countries are decreed to people. You have to use these currencies within these borders.
Well, and they are scams, right? Like the Argentine peso is a scam. The Brazilian real is a scam. Chile's got kind of a clever thing, though, which might give Austrian economists, armchair Austrian economists, I guess, out there.
I'm sitting in an armchair.
Yeah, there you go. So it's very appropriate. So Chile had this chronic inflation, right? And they had the socialism, and they had the facho, and then when he left, they introduced this thing called Unidad de Fomento, which means unit of fomentation. And they came up with an inflation index, and then all of the mortgages would be in this currency. So what happened is in 1990, they had like 20-something% inflation. In 1991, they had 16% inflation. In 1992, they had 12% inflation. In 1990, the numbers aren't exact, but by 1998, it was 4%. And you're in the ballpark of sanity, you know? So it really, really worked. And the reason why it worked is that it allowed the banking sector to capitalize itself with positive real yield. So I think thinking about it as like Bitcoin money good, dollar money bad is kind of problematic. Like, money is all about flow, and it's all about organizing human behavior over time and colonizing the future, so that we arrive at the future that has more economic organization and value, right?
Right.
So positive real yield lets you know that you're actually doing that when you allocate capital, right? So as positive real yield is increasingly dislocated by the late cycle of, Goldilocks central bank manipulation, I think that the like dollarized Bitcoin could come to replace like the U.S. Treasury bond as like the safe haven asset based on positive real yield.
So is this more like a free banking system that you're arguing for, where you can have like synthetic currencies on top of Bitcoin that sort of derive themselves from Bitcoin?
Yeah, ultimately they do. Yeah.
Yeah.
And I think ultimately the way it's going to scale to hundreds of billions or trillions in that kind of float is probably going to be at the wholesale level in the Lightning Network, or in this, like, we won't even call it the Lightning Network, because like the Lightning Network is, right, like 2 of 2 multisigs, right? Well, what about these 2/3 of n multisigs that are these sidechain channels, right? Mm-hmm. Well, they're all going to interact like physics, and it's just going to be Bitcoin, right?
Right.
And
it's going to be pushed to the background.
Yeah. Well, yeah. Ideally, the UX will be really simple, and all of the wholesale stuff won't be out. Like retailers that go to the ATM and get cash out don't have to think about the repo market, right?
All right. So I guess the ending question on this is: are we building a roided up replication of the system that we currently live on and are trying to get away from, or a more conservative and risk averse system?
I think it's more conservative because you can measure the systemic risk of a contract in real time based on on-chain data. So that by itself gets you a leg up from what we had pre-Dodd-Frank. And post-Dodd-Frank, it's like very cloistered in these CEFs, and it like doesn't really matter because you're trading with like Citibank. So it's like, a Citibank, bankruptcy is a bigger deal than just at that level. So I think the accountability gets us there. I think having a scarce money base at the bottom of the pyramid gets us there as well.
So I think that's the most important part of what scares Bitcoiners. They talk about like derivative markets and stuff like that. Like the difference between...
are we going to dilute Bitcoin synthetically?
Yes.
Okay, so I read an article about this for the block.
Yes, this is the
couple of months
question.
ago.
Thank you for asking the question I've been thinking of my whole time.
Yeah, and I
articulate.
So after the financial crisis, quantitative finance figured out that uncollateralized trades have a cost, and they combined a credit default swap, sort of credit optionality, like the put option on credit.
Yeah, so a credit default swap was basically the insurance policy on the mortgage-backed securities that were...
Yeah, like I own some stocks, I buy a put on it. That costs me something. I own a bunch of bonds, I buy a credit default swap.
CDS, yes.
So the guy who's selling the credit default swap is getting less yield for the same risk than if he just held the bond. But don't worry, because they're inflating, they're selling a lot, and they're just, AIG almost went belly up with that, right?
Yeah.
So...
Some
Okay.
people would argue 2008 was a run on AIG. That's what
and quite a few others as well.
Yeah.
And the thing is, a lot of them were swimming naked, right? They were super leveraged, and it would have been this domino effect. But what they did is they took the math from pricing credit default swaps, they combined it with the math of pricing options, basically, and they figured out, okay, if you're going to do an uncollateralized trade and there's this window prior to delivery, they have to pay. They have to pay a premium, right? So if they float off, well, whatever, we got the premium at least, right? So they call that a counterparty value adjustment. So right around the time that guy posted that article on the Lightning dev list saying that Litecoin has no place in the Lightning Network because the HTLCs have this optionality risk that you're sort of writing a free call option. I found something on LinkedIn that was a slide share from a quant guy going over like the history of quanting stuff. I should go fish for a link to that. I think some people might want to dig through that. It's quite mathy, but if you just kind of skip over the differential equations, it gives you the broad strokes. So basically, they figured out how to do this, and then the most crazy derivative that exists is writing a counterparty value adjustment on a whole network of counterparties, right? Mm-hmm. So in the article that I published on the block a couple of months ago, I was saying how in Lightning Network, of course this is permissionless tech, people can run other clients that operate more loosely, right? So you could pay a premium to take care of the counterparty risk in the time window of an HTLC to do Bitcoin to Litecoin. You could also do a counterparty value adjustment to float a check just within the Bitcoin Lightning Network and get around this incredibly high redundancy rate that we're experiencing as a limitation on it, right? Mm-hmm. So now we're starting to play with fire, right? But my thought is basically you temporarily increase the money supply in this band, right? Like, I mean, if I take my coin...
How would you do this?
Well, if I take my coin to BitMax and somebody gets long, they're holding synthetic Bitcoin, right? But I'm also holding a Bitcoin. Mm-hmm. So you could say that open interest in futures and swaps and call options even is some degree of inflation in Bitcoin, right? But it makes Bitcoin more useful, and it's limited. And if
it's limited to the point at which you get margin called, and then
right. So there are checks and balances that keep it from being truly inflationary in that sense. Whereas in the legacy financial system that we've had today, you can write these things. The Fed's got your back, mm-hmm. right? We don't have that in Bitcoin.
No, I would argue that's beautiful.
Yes. Absolutely. That's the that's what liberates us, is that we have to be accountable for our own decisions, basically.
Right?
Yeah, it's the price of freedom.
And coming back to liberty, there's no future without liberty. Like outside of Bitcoin, like what drives you towards this mentality?
Well, I've always been kind of a freak,
Yeah.
I've always been a nonconformist.
Yeah.
So, and my wife's the same way. She's just spent her whole life not doing anything anybody told her to do.
Boss.
Which is why we get along so well. And although we do fight sometimes for that reason, but then
I fight with my wife.
We
all
resolve
the
it
time as well.
Well, there's arbitration, and we do a proof of Byzantine failure, and we resolve
who was right, who was wrong.
Yeah, or whatever. We just forget about it and move on to the next block,
mm-hmm.
right, and settle it out even. So, I mean, we saw in the Soviet Union that they took away the general decision-making latitude of the average citizen, which cost them economically. It also cost people psychologically, right?
Mm-hmm.
And in America, you can criticize capitalism for commodifying things, and people are. But this is a criticism on the left and the right that people shouldn't get drunk every night or whatever, and run up their credit cards. Like, they should be more thoughtful. Okay. And this is what has made America great, is you have a rule of law that allows people to make decisions in which in aggregate has accumulated a lot of value.
Mm-hmm. Yeah,
Plus, there's the military conquering people and shit. But okay,
And that factors in, but not as much as the economic activity.
I like to think so. I mean, you could say that the military is like the proof of work for the dollar. But I think that if we cut the military budget in half, it wouldn't destroy America, and it would probably...
I don't think so. I think the nuclear game theory that exists already has sort of locked us into
and the economic game theory.
The economic and nuclear game theory in particular, I think, has locked the world into a point where we're
and drones. That's going to completely change the game, because then you can actually do guerrilla warfare.
Well,
which is pretty grisly.
We saw it happen in Venezuela, right?
A little bit, yeah.
I mean, it wasn't successful, but it was an attempt.
Well, we saw it in the first Purge movie that came out last year. The government sends some drones out to shoot the guys when their mercs can't get it.
Well, that's what gets. I mean, God, I wish we had enough time to jump down this. But we were talking about facial recognition on Twitter yesterday.
Yeah.
And if the government can send a drone with facial recognition AI on it, go kill this person because I do not like what they did.
And this is, I think this is the next phase, is having people be able to control their economic destiny is a good step. But then there's all this infra that's robbing us of sovereignty in other ways. So the Ethereum guys trying to decentralize everything, and they're poking around in that direction, may end up being useful as we distill these things, because AI in the future and your data, everything's going to need cryptographic checks in order for you to know that you're not getting bamboozled by the panopticon, right?
Yeah, you're not getting what is it? The face swap. What is it? Somebody makes a video pretending.
Oh, deepfakes.
Deepfakes.
Right. So that's an example where cryptography is useful.
Yes.
And really history in general, the ability to rewrite history is increasingly predominant.
You have to sign the videos you paste on Instagram with a PGP key going forward.
Yeah, something like that. And that, I think that's a general model for keeping people in control of their lives and not getting into some crazy sci-fi nightmare,
Are you optimistic or pessimistic?
I'm generally optimistic because, like I said, I believe in the Holy Spirit, you know what I'm saying? So I think there's a prevailing shelling point of goodness, if you will. I'm kind of like John Locke in that regard.
I like that comparison.
Yeah. I think the problem with being conservative is that you get too pessimistic and then you bias yourself against, or it's like being bearish. Bearishness is like economic conservatism. You're like, oh, this is bullshit. It's overvalued, and then you miss the convex. You can only lose zero, but the thing can go up logarithmically.
I've really in the last 6 months been diving into Thomas Sowell's thought experiment of the constrained versus the unconstrained mind, and trying to find a balance between the two. So an unconstrained mind would be a Bitcoin maximalist who doesn't think you should change the protocol at all, and you should be as conservative as possible. The unconstrained vision or mind would be like an Ethereum where, hey, let's do fucking everything at once.
Yeah.
Right here, and trying to find a balance between the two.
Well, that's what I've tried to accomplish with TradeLayer, is distill some of the good R&D that's been out there and applied to Bitcoin.
And again, these trade-offs exist at different layers. So I that's why I'm a Bitcoin. I hate saying the term Bitcoin maximalist. That's why I'm a monetary maximalist, and I believe in Bitcoin in the long run as the accumulator of most of the value in these cryptocurrency systems. And that is because at the base layer, I think the constrained vision is more advantageous, where so you be conservative as possible, you change as little as possible, and you have these assurances. You want assurances that it's going to do the same thing that it's done up to this point, into an unforeseen point in the future. And that's the certainty that it's going to act in that way is a very strong assurance that you can build off of, and then you can build an unconstrained sort of vision on top of that.
Yeah. Well, and for example, the checkpointing issue that Bitcoin has with potential reorgs, you can do checkpointing as a service today, and then with
shout out James O'Byrne, fellow beefy Bitcoin boy. He's
what's his thing?
He's just brought it up on the Bitcoin mailing list. Assume UTXO set, which is quasi checkpoint.
Yeah.
No, it is a checkpoint, but it's buried 10,000 to 100,000 blocks in the blockchain.
Oh, nice.
Yeah.
Oh.
But the idea is that you would have a checkpointing, and the IBD would be distilled down to a few minutes instead of 12 to 18 hours. And then you'd have sort of if you wanted to use Bitcoin and transact sort of in a timely manner, you'd have this assume UTXO function. It would give you sort of like a quasi SPV model that you could use to transact, and meanwhile the whole state of the blockchain is downloading in the background over time, and once you're fully verified, you'll be using like a fully
just as a way to bootstrap people with onboarding. Okay.
Yeah.
But also to solve the issues around reorg attacks and like settlement finality being distorted by miners. You can, like the sidechain thing I was saying is like a more potentially resilient checkpointing as a service. Oh. And
so you use quasi proof of stake for checkpoint? Yeah.
Sure.
Yeah. I like that. It's
the marriage of heaven and hell. It's the yin and the yang.
Well,
it's the peanut butter and the chocolate. It's the steak and the work.
I know people don't like talking about shit coins on this podcast. I don't like it in particular either, but that is, again, like we were talking about Decred earlier, that's one of their main cruxes. Like we're quasi.
Well, the maximalist credo is we'll just osmosize all the good ideas.
And I think that's what's going to happen.
Yeah. I'm trying to make it happen with this thing.
Well, because I do think it is a good idea. You get extra assurances.
Yeah.
Right? Yeah.
Yeah, definitely. Well, I think we're officially now too drunk to keep ambling on, huh?
I think so as well. We're 2 hours and 11 minutes in.
Oh, man, what a podcast.
I think I learned a lot. I think I did learn
Me too.
It's I think it was very like all over the place, but I loved it.
Yeah.
Right? Patrick, do you have a parting note for the freaks out there?
Yeah, so I'm about to try and roll out this test net. You know, we have a wallet up that we host. We'll have a Explorer up, and initially we want to do like a Qt interface that's kind of for a niche audience, but I know y'all would appreciate that.
Love the Qt interface.
We might roll out just like a TradeLayer D client with like a bash script, and then to launch this thing, we're going to do a node reward. So instead of just running a full node and virtue signaling about it online, you can get paid for it in a Metacoin, and I want to get a lot of people downloading what we publish and running that. So I'd love to have you on board.
Where can we find more information about this?
Well, TradeLayer.org is our main website. I got LayerExplorer.org and Layer Wallet. I haven't loaded those up yet, so don't go to those just yet. But
Bitcoin Wisdom exists as well.
Bitcoin Wisdom, that's right. And we're gonna go public with our GitHub and have the checksum and everything, and you can download this. So and you can follow me on Twitter at Duganist, and also at TradeLayer. We don't update that very much lately, but that's like the brand name thing. So when we do publish this, we'll do it through these channels. I think there's also a mailing list at the bottom of our website, so we'll put it out through that. We'd love to have the true Bitcoiners come on for the fair launch and get more. I mean, obviously, if you're running a full node already, why not get paid for it, basically? Right?
Yeah. So. Well, thank you for DMing me. Thank you for coming through. It's been a fascinating conversation. I think we're going to have a couple more, because I think we're going to have to like dive deeper.
I'll come back on in 2020, and we'll see if we're in a Panopticon yet, or if this is.
Hopefully we're not. I don't think we will be. But I think this is the first of many conversations.
Well, we're in a Panopticon, but like it's not that bad.
No, it's not that bad. It's not. I feel like we still have the power to fight back.
Yeah, definitely.
Patrick, thank you.
The truth will prevail.
I feel like we need to have like 7 more conversations before I fully understand you, what you're working on, and how it's gonna. And I just from speaking with you, I think it is gonna benefit Bitcoin from like a fee pressure perspective.
Yeah.
But like from the mechanics, I still need.
Well, and if it gets like blown by the wayside and all the R&D advantages get absorbed into whatever is like sort of the Blockstream approved like pure BTC model, like I don't have any regrets about doing what I've been doing, man.
That's the beautiful thing about the space is you can fucking try whatever you want to, and you're putting yourself out there and trying something, and I'm fascinated to see how it's going to play out. So
yeah,
thank you for spending a couple of drunk hours with Uncle Marty on your trip to New York. I hope you guys enjoy your wedding this weekend.
Yeah. Well, it's not our wedding, it's my sister's, but yeah.
Yeah, your sister's wedding.
Yeah, we'll drink more then.
Yeah. Peace and love, freaks.